London, and here are your top stories. Governor Kuroda stuns the markets by adjusting his yield curve control policy, signaling the central bank may be inching towards normalization. Traders jolted. The Bank of Japan surprise sends the yen to its strongest level since August, while government bonds and global equities actually slump. Plus, criminal charges. A House committee recommends that Donald Trump should be prosecuted for his role in the January 6th assault on the U.S. Capitol, the first ever referral for a former president. Now, let's take a look at the futures. I have to say it was a quiet, pretty boring day ahead of that BOJ. And then as soon as we had that BOJ news with the Bank of Japan unexpectedly adjusting actually some of its yield curve control policy, the yen rallied and it's repriced everything in the markets. So European stocks futures for the moment down 1%. So we're expecting a lot of this to work its way through, not only today, but in the next couple of weeks. Now, the one thing I would mention is that the impact of the BOJ's shift will likely ripple through global markets for the remainder of the year and probably well into 2023. Japanese investors, who of course everybody knows are one of the biggest holders of treasuries and major players in European debt, now have more incentive to bring money home. So you can see equity indices in Europe opening up. The FTSE down 0.6%. The IBEX over in Spain, one of the first ones to open as well, 0.8% lower. We really spent a bit of time looking at sovereign bonds. I know we have treasuries in the asset board, but you can see France, the 30-year, actually at 2.94. The Spanish 30-year is also at 3.65. The other story we want to watch out for is what's happening in gilts, and it seems that gilts took the brunt of the moves actually ahead of treasuries. You know, as traders, I guess we're pricing what the BOJ was going to do. So let's go to treasuries and look also at what the dollar's been doing. Again, the focus today, which really took the markets by surprise, is firmly on the BOJ. We also heard from William Dudley of the New York Fed, formerly from the New York Fed, and he said that, look, optimistic markets could only make the Federal Reserve tighten even more. We don't have these optimistic markets today with the S&P 500 futures down 0.6%, and yen 132.48. So we'll have plenty more calls on where the yen could go from here. Let's also get straight to our Bloomberg MLive managing editor. He's Mark Cudmore. Mark, what do you make? I've been dying to ask you. You're looking at today's surprise announcement by the BOJ. What do you make of it?
It's brilliant. It's an early Christmas present for all those macro PMs out there, the macro funds that have done very well already this year. Unfortunately, it's stealing Christmas from many of those equity traders out there, and I think that this is going to be another impetus for risk aversion into year-end. We are already expecting that from last week, from the central banks we got last week, and really Bank of Japan is following that message of hawkishness. So what happened? Well, this is 10-year yields in Japan over the last year. Pretty boring. Suddenly, boom, shock. That's what happened. Well, let's put this in a global context. That was the immediate move of the policy change today. But if you compare this to global yields, this is going, the 10-year yields going over the last 3 years, US yields, German yields, UK yields, and Japan yields. You know what? That includes that boom explosion. You can barely notice it. A tiny little tick up. So why are we getting so excited? Well, what this happened today is it was the BOJ capitulating. They might try to claim they're not capitulating. They might try to claim it's about financial market functionality and not about economics. But you know what? It is about them capitulating to the macro speculators out there that are winning this battle. And what they're betting is that the BOJ is going to have to go much further in their concession. And that will be the 2023 story. Basically, the BOJ has opened the door an inch, and that's what it looks like in this chart, and they'll run a mile. And basically, the upward pressure in global yields will drag these yields higher. But it's a two-way story. The fact that JGBs have just seen a shift higher in yields will be an upward pressure in yields globally. Remember, Japanese investors, for example, are one of the largest holders of treasuries. So if they're going to start repatriating cash to Japan at some point, well, then that's going to be money out of the treasury market and put upward pressure there. So that's the yield story. Why did this happen today? Well, CPI. Bank of Japan is trying to maintain that we're nowhere close to the 2% target. We'll let you know when we get close. This red line is their 2% target. Now, they're maintaining they're nowhere close because they're still below it. Well, actually, this is CPI. Now, since March, basically the last reading below 2% was in March. So every reading from April onwards, the last 7 months of readings, the last one is October, has been minimum 2.4%, up to 3.7% year on year. So when they say that they're not close to getting up to the 2% target, this is why the market is struggling to believe them. They've lost a bit of credibility. Now, it is true there's nuance to the story, how sustainable it is. Are we going to get wage inflation that will keep it up? If there's going to be a big global growth slowdown, will this come down very rapidly? Those are all risks, but at the moment, it's looking like Bank of Japan policy is completely out of date and completely wrong for the global macro environment we've got. And macro hedge funds are going to keep on betting the BOJ. They've kind of admitted today they got it wrong. They're going to have to concede further next year.
Mark, I have to say, Cudmore fired up is like my Christmas present. So does it mean that the markets are now pricing in like policy normalization under a new governor?
Policy normalization might be quite a stretch, but you're right, Fran. The market is betting that next year, when Kuroda goes, there's going to be much more. But the point is, it's not only betting that 2023 that rates are going to go higher, that this is the start of a rate hiking cycle. That's basically what the markets are betting on. But I think that every BOJ policy meeting before then will have the risk. There'll be pressure on the BOJ to concede again. Now, Kuroda doesn't like giving freebies. He likes surprising here because he liked kind of doing it when the market least expects it. So I suspect he's going to try maintaining the line to the new governor in April. But yes, I think this is the start of maybe the slight normalization by Japanese standards, not in line with the rest of the world. And it's soon going to be the end of negative rates in Japan, which the banks are celebrating about.
Mark, thank you so much. Fired up Mark Cudmore there, Bloomberg MLive Managing Editor. Now joining us now is Neil O'Sullivan, Neuberger Berman, Chief Investment Officer. Neil, I mean, it is an exciting day because actually, he took everyone by surprise, or most people by surprise, but at the same time, it's kind of been a long time coming.
It's funny, when I was thinking about last night and coming in today, and I was wondering if you asked me what might have been a kind of an unexpected shock for next year, I was thinking to myself, it might be a change in Japan. I did not expect it to happen coming in this morning, which is always a little bit of a high wire act when you're coming in after that. I think the shock is right. It's coming also at a time when obviously markets are less liquid. The run into the year end is obviously a point where you can move things around. I think, as Mark said, it's probably a little bit early to call that we're moving to a full normalization, but this is a big deal and has the potential to spill over into other areas. You talked about treasuries and those sorts of things that run in. Think of somewhere like Australia. About 20% of the Australian bond market is owned by Japanese investors. If they start repatriating capital, that has a potential to be a very big change.
But Neil, so first of all, does it make sense? So if you look at the timing of this, right, this really comes under market pressure on the bank's yield curve control policy, and Governor Kuroda basically said that this was for market functionality, that they had to do this.
I think that's right. I think we're focusing on inflation and wage growth, and that is part of the equation. But also they'd become such a dominant player in the ownership that you weren't getting the normal trading patterns. People were referring to the market as becoming dysfunctional. He hasn't raised the rate, he's just widened the trading bands and allowed things to move a little bit more naturally in market dynamics. So I think people might risk reading a little bit too much into it. I think, though, what it speaks to, and we talked about macro traders, if last year was the year of people getting to a point where they were going to try and get inflation under control, next year is going to be the year where they start to stick at it. And that could lead to real shocks day after day and week after week like we're seeing this morning.
Yeah, I think we have a great chart actually looking at the YCC bands, and Kuroda was really at pains in saying, first of all, the yield curve tweak is not a rate hike, and I think he said it many times, and he does not expect a further widening of that band, but he's gone in April. Right, so does it all boil down to actually market expectations for the new governor, and we don't know who that is?
We don't know who that is, but I think we do know, and we, on our side, positioning in portfolios, have been expecting that we think that we're likely to see a resolution of more normal policy by international standards coming post-Kuroda. I think what is a little bit surprising is we probably would have expected the wage growth, because he had put a lot of store into that being seen and being real before he would start to loosen things. But I think the market dynamics and the trading ranges probably became more of a factor in the short term.
So in the longer term, what does this mean for treasuries?
I think at an overall level, what we're looking at is globally financial conditions tightening, and the last part that was still loose is now beginning to tighten. And what that's going to mean is, I think, in the next few days, in a very liquid market, pressure on a lot of fixed income assets. But there's a second order question, actually, which is, I think as you look at 2023, you're going to see liquidity being sucked out of lots of areas. Yeah. And lots of people who've been used to plentiful liquidity, they're going to see that that's moved away. In a funny way, it's going to be a great time to be an opportunistic investor. It's going to be a great time to be a provider of liquidity if you have it, because the natural liquidity is leaving the market.
But are you talking about bubbles also bursting because of a lack of liquidity, or are you talking about technicalities like what we've seen in treasury markets?
I think in treasuries, what we've seen obviously in Europe and the UK over the last few days is a sell-off driven by the central bank messaging. Over the course of the last week, up until today, actually the US rates had fallen rather than risen, because people are getting used to it, seeing the Fed closer to the end of their journey and the downshifting starting. What I'm talking about is more that there's a lot of parts of the marketplace, particularly in various areas of private markets and others, who have been used to be able to get capital plentifully. Yeah. And I think the marginal dollar that people will be able to deploy into those areas will be very interesting.
Are markets underpricing the risk of recession overall?
I think at this stage, if you were to poll most people, they would say that, US recession about 50-50, Europe recession, UK recession much higher than that. But it's probably not so much about the recession pricing. It's about the fact that this is just going to be a harder market to operate in than it was before, and what will that mean? And I think the other thing that people are probably missing is that in a world where cash wasn't a comparator, I mean, up until now, if we were sitting here this time last year, government bonds were really return-free risks rather than risk-free returns. Now, a lot of risk assets have a real competitor in cash, in government bonds and short-duration credit. That's going to make all other assets reprice out the curve and probably mean that there is future hits to come in certain risk assets.
Thanks so much, Neil O'Sullivan there. Neuberger Berman, Chief Investment Officer, stays with us. Coming up, the EU finally strikes a deal to cap natural gas prices, ending months of political wrangling. We'll break down the details next. And this is Bloomberg.
Go. After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun.
We are joined by UCLA quarterback Chase Griffin. Not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open, everyone. 13 minutes into the European trading day, and frankly, it's just a big markets day. As stocks and bonds slumping in the wake of the Bank of Japan's unexpected adjustment to its yield curve control policy, the yen rallying, and we're seeing a lot of European stocks under pressure. Now, European nations have reached a deal to cap natural gas prices at 180 euros per megawatt hour to help ease the energy crisis gripping the continent. Now, shares in NG are falling off the back of the news, down 4.3%. Bloomberg's Anna Shirskayevaya joins us now. So, Anna, exactly how does it work? And is it just, great news that they found a price on which to agree on?
Obviously, it's a decision finally reached after months of deliberations, and so how the price cap will work, it will be automatically triggered if the European gas benchmark, the front-month contract, exceeds 180 euros megawatt hour for 3 working days, and at the same time, this benchmark price has to be 35 euros higher than the global LNG price for the same 3 working days. And there is a suspension mechanisms in place. So, for example, if we see a substantial decline in LNG supplies, if demand rises sharply, or if traded volumes of gas contracts reduce, then this mechanism would be suspended.
So, Anna, how do we know when this is going to be effective? Like, how do you measure success? Because there are many concerns around it, too.
There are many concerns indeed, and then we still have this observation period. So the mechanism doesn't come in force until the 15th of February. So we still have almost 2 months to see how the market plays out. Now, obviously, the concerns are there as well, because first of all, the LNG supply can still go somewhere else if Asian prices are higher. And at the same time, Goldman Sachs today warned that without associated cap on demand, actually this price cap could trigger consumption and cause a deficit in supply, because we are still basically fighting for the same available pool of supply, global supply. There is no new molecules coming in the market until mid of the decade. And another concern is that the traded volumes could actually move from exchanges to the OTC market. So all of that will be seen when we'll see the mechanisms in place.
So, and again, this is one of timeline. Given all the concerns that you beautifully laid out, when would peak concern be? Is it 3 months from now, 6 months, or a year?
I guess it will depend. Obviously, most important thing is for Europe is to ensure that next year, when the gap in supply will be so huge that the supply keeps coming. So we may as well, like if this price cap is efficient, we may as well avoid this kind of extreme price spikes we saw in August, September this year. So it could be sentiment driven, it could be supply concerns, but yeah, if we can avoid that kind of price spike, that actually we can say that the price cap achieves that. So will it or not, it will actually help secure supply to the market. It remains to be seen. Obviously, as I said, the International Energy Union agency warns of an increasing supply gap next year when there's more time without Russian supplies.
All right, Anna, thank you so much. Anna Shirskayevaya there, looking, of course, at the energy complex in Europe. Now, we're back with Niall O'Sullivan, Neuberger Berman, Chief Investment Officer, and I pronounced even your name correctly, so I know you're going to get the markets right. Now, when you look at everything that's going on, when do we go back? And I don't know whether this is something for the 60-40 portfolio. Is that dead in the water?
I think the interesting thing about the 60-40 portfolio up until recently was people were most worried about the 40, because they were looking at the bond side of it and saying, how can this generate a return? You now have a situation where all sorts of fixed income assets of varying durations can generate a return. In many ways, they're a competitor to equities. And I think what people are actually more thinking about is, what about the 60? Because if you look at what's working out from here, there's a lot of companies whose earnings have not adjusted to what may well be a new reality. And we're very wary around equities at that point. I actually think, though, the critical question is, if inflation stays high and volatile, then bonds and equities tend not to diversify each other. So what else can you put in there that does? So it leads you to thinking about maybe some of the macro trading strategies we talked about earlier on, diversifying strategies, things that will not zig and zag, or will zig and zag differently to bonds and equities in a high inflation environment.
Are you expecting to go back to, stocks and bonds moving in tandem next year?
I think that as long as inflation stays above 3 and volatile, you're likely to see that bonds and equities stay joined at the hip, because inflation fears drive the market rather than growth fears. What will cause a change in that relationship is when growth takes over as the fear in the marketplace, and I think we're a while off that way.
That's what, 2024? When do we start seeing the Fed cut rates?
I think, so obviously the market thinks a lot quicker than that. Our view is that inflation is sticky. It's got into places where it is particularly sticky, like services, and they're going to have to keep at it for a bit longer. I think the ECB did an incredible job last week because they got everything right in terms of the messaging, joined it all up together. They also will have to stick at it, but of all the central banks, I think they're the ones that would like to stop if they could.
That's an outlier call, actually, compared to what the market thinks. I mean, I'm fascinated. This is too important not to spend a bit of time on it. So you're expecting inflation to have peaked but remain at these levels. So
Correct.
The markets aren't understanding that actually there's much more pain to come in terms of financial condition adjustments.
One of the conversations we had yesterday as a team is there's just these disconnects that are out there that just don't make sense. They're contradictions. You hear people talking about inflation and the fears, but yet the 10-year break-even inflation in the US is lower than it was this time last year, and only marginally higher in German inflation, for example. And so that is a contradiction. The bottom-up versus the top-down in earnings is a contradiction. And we think what's likely to happen is inflation is going to prove harder to slay. Labour is stronger than it was. You just have to look around the UK to see what's going on in that context. And therefore, the central banks will have to keep at it longer. That doesn't mean they'll be hiking at 75 like they were, but I think they'll have to keep out the 50s for a bit longer than expected. The bank that is closest to the end of its journey, though, is clearly the US.
So, but when you look at all of that, tactically, how do you play it?
So I think when you look at inside the portfolios, there's a few things that we are doing. One is on the equity complex, if those earnings have not adjusted to a recession, you have to favour the fittest. You have to favour the people for whom a recession is ultimately good news. You have to avoid people who the quality of earnings is very, very weak. Secondly, I think that as those rates rise, financial conditions stay tight. As I said earlier, liquidity gets sucked out. That means you want to be an opportunistic player, the provider of the marginal dollar where it is most needed. If you're going to invest in liquid structures, for God's sake, make sure you are getting rewarded for that liquidity. And then last of all, I think, when you're looking at structures that have liquidity built into the structure, so if you can get term liquidity, that's incredibly valuable right about now, if you can get it rewarded through the portfolio.
Now, really quickly, I mean, there's a divergence between ECB and the Bank of England. So do you play it through pound or do you play it through gilts?
I think the Bank of England, the divergence is there, but actually I think both banks are ultimately trying to do the same thing. They're doing it in different ways, though. The Bank of England is being much more dovish in its commentary. The ECB is being much more hawkish.
Now, thank you so much for joining us. Niall Sullivan there, Neuberger Berman Chief Investment Officer. Now, coming up, ENGIE announced a hit to its bottom line following the EU price cap. We'll look at the French energy company and, of course, other European movers. That's coming up next, and this is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Welcome back to the Open, everyone. 24 minutes into the European trading day. This is a picture across the board. Stocks and bonds dropping. Yen jumping as the BOE, or the BOJ, apologies, the BOJ saw a shift in its yield curve control. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. A House committee has recommended Donald Trump be prosecuted for his role in the January 6 assault on the U.S. Capitol. The committee voted unanimously to refer Trump for prosecution by the Justice Department on 4 criminal offenses, including insurrection. It's the first such referral of a former U.S. president, adding to the legal and political troubles plaguing Trump's 2024 re-election bid. European nations have reached a deal to cap natural gas prices at 180 euros per megawatt hour. It ends months of political wrangling over whether to intervene in an energy crisis that has risked pushing the region into a recession. The cap is significantly lower than an earlier proposal by the European Commission, which would not have prevented the price spikes seen earlier this year as Russia curbed gas supplies. Chinese banks have maintained their benchmark lending rates for a 4th month after the central bank last week kept its monetary policy settings unchanged. Some economists had expected a 10 basis point cut in the 5-year loan prime rate to help the embattled property sector. The PBOC has kept its key MLF rate unchanged since August, treading cautiously as officials abruptly lift COVID restrictions. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thank you so much. Laura Wright in London. Now, these are some of the main movers in today's trading session. First of all, we have Engie. Now, this is a French power company that really distributes quite a lot of energy across Europe. Now, Engie falling some 4.6%. It did see its EBITDA actually hit from some of the European energy measures. We had a great roundup of what some of those energy measures are by our Anna. It did confirm guidance for 2022 for Engie, but of course the energy measures will hit with that price cap. But the other picture is of Credit Suisse. We're seeing some shuffles with bankers leaving the U.S. investment bank, Baird, but also they have a new group treasurer, and we see some of the banks, including Citi and RBC, trying to cover Credit Suisse, again saying they need more visibility to resume coverage. And finally, Pearson. The stock down some 0.3%, but overall, I think one of the best performers this year as they focus on higher education online. Coming up, members only. Twitter will restrict voting on company policy to paying Blue members. More details to follow. This is Bloomberg.
What are the biggest challenges for General Dynamics, and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, they're the problems that come to me and my senior leadership team for resolving. tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? The why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. BOJ shocker. Governor Kuroda stuns markets by adjusting his yield curve control policy, signaling the central bank may be inching towards normalization. Traders jolted. The Bank of Japan surprise sends the yen to its strongest level since August, while government bonds and global equities slump, plus criminal charges. A House committee recommends that Donald Trump should be prosecuted for his role in the January 6th assault on the U.S. Capitol, the first ever referral of a former president. Now, this is what the picture looks like for the markets overall. We're seeing stocks, but also bonds slumping. This is on the back of the Bank of Japan unexpectedly adjusting its yield curve control policy. Now, we've seen a lot of market participants, of course, saying, look, investors might be better holding back for the moment from jumping into Japanese bond markets too quickly. Of course, some parts of the markets are just going ahead. The impact of the BOJ's shift, and this is what we're reading everywhere, will likely ripple through global markets for the remainder of the year and then into 2023. European stocks, you can see, down 0.9%. So let's also look at which sectors are on the move. Now, this is a difference if you're, of course, one of the earning companies that will report in January or February that is very dependent on the global economy. You'll have a tough time going into 2023. We do have real estate, technology, and auto parts on the downside. Again, remember, we are seeing thinner trading volumes in general. And then still on the downside, but losing less than the others, banks and healthcare down 0.2%. So the Bank of Japan has shocked markets by adjusting its yield curve control program. The central bank will now allow Japan's 10-year bond yields to rise to around 0.5%, up from the previous limit of 0.25%. Now, the change has sparked a jump in yen and Japanese bond yields. For more, we're joined by Jamie Rosh, our chief European economist at Bloomberg Economics. Jamie, I mean, it's quite thrilling, actually. There's like, you're 3 days from Christmas, and boom, Kuroda says, actually, we're kind of loosening policy. And so some people think this is towards normalization, but he was at pains in saying, look, this is it for now.
Well, they do love a surprise, don't they, the Bank of Japan, but it's a real belter. I think that, how should we think about this? Is this the start of like a Fed-style hiking cycle? No, it's not. No. It's what is it? I mean, they face this policy trade-off, right? So they want policies to be loose, inflation's still too low on an underlying basis, but that has invited huge yen depreciation as the Fed's hiked. And that's become counterproductive. So I think that it's really just a recalibration within this policy trade-off between yen weakness and trying to support the economy back to target.
But does it mean, but because he's also stepping out in April, are the markets, too much going ahead of themselves because they think that this is it, this is a new policy, and we're going to normalization?
I think it's probably too early to say. I mean, certainly my colleagues in Tokyo are of the view this doesn't herald like a major shift towards like a more wide-scale normalization. But it is clearly it's a movement in that direction. But I think it's too early to say that.
Jamie, also to put this in context, Japanese investors are actually amongst the biggest holders of treasuries and major players in European debt. So basically, this move gives them more incentive to bring money home.
It does. I mean, when you look at the scale of the move, we're talking about 25 basis points here on Japanese yields, aren't we? I think when you look at how 10-year bond costs have evolved over the past year in Europe, there are still plenty of reasons now to own European debt. I mean, it's become much more high yield, isn't it?
So as you look at, there's some great research really from you and the team, so congratulations on that. What are you expecting from the Fed? And again, I keep on going back to the markets because there's, things that economists and Fed officials say, and then the markets kind of interpret it differently.
Yeah, so it's our view, and our US colleagues' view has been that the terminal rate be 5%. They thought that for the past year, and that's still the view. So we think inflation is going to be sticky on the way down, much sticky. It's going to fall much more slowly than it went up, and this is just going to keep the Fed hiking this into 2023. I think what's been really interesting has been seeing how the diagnosis of the inflation problem in Europe has changed. Yeah. And I think that's one thing that we're focused on, is that at the beginning of 2022, it looks very much like the Fed had a demand problem to solve, yep, and Europe had a supply problem. Now the similarities are actually starting to look more close than the differences, I think.
Who do you think is doing a better job, actually, in explaining what their challenges and how they're dealing with it is?
So I think the Bank of England have done a pretty good job of it. I mean, they've always acknowledged that, and they were actually relatively early to it, I think. They've acknowledged that they have the potential overheating problem as well as a supply problem. And they got out there early. They have probably conducted the right policy prescription for the problem, which is we have some domestic strength. I think the ECB is where it really is difficult. They've started off too slow. And I think the risk now is actually they go too fast and over-tighten, because there is still a difference between what's going on in Europe, what's going on in wages in Europe, relative to the UK and the US.
But Jamie, so overall, I know you've explained it beautifully, that it's different, of course, from the US to Japan in terms of inflation, completely different where Europe fits in. But there are similarities in that the labor market seems to be holding pretty strong everywhere. So even if we've reached peak inflation, how long will it take for inflation to come down to target?
Right, I think that's the big unknown, isn't it? It's how the labour market is going to respond. We've had this period of incredible strength in the labour market, which means that people don't want to companies don't want to let people go, because if there's a short shock, they're going to have to rehire people at great expense. And I think that's the unknown quantity here, is that we've seen vacancies coming off in the UK. We've seen some evidence of beginning to slow down in the US. The question is how protracted, how severe is this slowdown in the labour market going to be? And there are reasons to think it won't be very severe at all, which obviously extends the pain into next year.
Yeah, and certainly in the UK, so the labour market then changes everything for house prices and mortgages. So as long as the labour market holds strong, can we kind of muddle through a mild recession?
So it's interesting. So do you need unemployment to go up for house prices to fall off a cliff?
Yeah.
No, because if you look at what's happened in Sweden, you've seen that there's double-digit declines in house prices, but the labour market's still strong. So I think actually for the UK, as we're looking across Europe, that's actually an important lesson, is that you can have a big impact without the labour market.
Yeah, but I thought here we went through a financial crisis where Sweden kind of breezed through it, and so it's also an overhang of what they didn't live through 10 years ago.
Yeah, I think if we looked at overvaluation metrics for Sweden versus the UK, they look fairly similar at the end of the pandemic. There's a lot of froth both in the UK and in Sweden, so I wouldn't be surprised if we see, we're expecting a near double-digit drop in house prices in the UK, certainly.
So interesting. Jamie, thank you so much. Jamie Rush there, our chief European economist at Bloomberg Economics. Now back to the markets, because it is a very big day for Japan, and actually that's changed everything all over the world. The stocks and bonds are slumping in the wake of the Bank of Japan unexpectedly adjusting its yield curve control policy. Now, when you look at what that means for yen, the Japanese currency, which had been appreciated since late October, surged 3% versus the dollar to the strongest level since mid-August. Japan's 10-year yield, which had moved at a glacial pace, let's face it, in recent years under the weight of the YCC regime, surged more than 20 basis points to the highest since 2015. So we've had quite an interesting, I would say, 12 hours. Now we continue with, of course, big market stories. So that's the BOJ that I was just talking about. Let's bring in our markets reporter, Valerie Teitel. So Valerie, I mean, the broader impact of the BOJ's move cannot be underestimated.
Look, it really can't, and especially that it came the last week of December when there's such thin market liquidity already. But I want to talk about one thing in Japanese interest rates. We heard from Kuroda that he said that this yield curve control, the widening of the band is not an interest rate hike. But the market is clearly taking that at a different angle. I've got a graph here of front-end interest rate swaps in Japan. They've moved nearly 20 basis points since this announcement. This is clearly a market who's trying to price in what's coming next, which is Kuroda or his successor pricing in a hiking cycle, communicating to us that they intend to normalize policy. Yes, that might not be till April, but the market is already pricing it in. And why is that important, Francine? A lot of these Japanese investors use these front-end interest rates to hedge their flows back into yen. If this is already happening in forward space and forward yields, it's already going to hit their bottom line, and Japanese assets are going to look more attractive to these investors instead of holding foreign assets.
Valerie, taking a global look, are Japanese investors big enough to have a measurable drag on markets? Before I ask you that, I think we're getting some breaking news. Blue Bay and UBS Asset Management are amongst some of the winners on the BOJ policy tweak bet. So, of course, every trading desk is now cutting through the losses or looking at some of the money that they've made. And through our great reporting, Valerie, we know that Blue Bay and UBS Asset Management are among some of the winners because they were on the right side of the trade. So, overall, Japanese investors going to make much difference into 2023?
Yeah, so if we can look at my next chart, I want to talk about one thing. Japanese life insurers are one of the biggest asset investors in the world. They hold nearly $3.5 trillion of assets. And even if we just look at their holdings of treasuries, nearly 20% of treasuries that are foreign owned are held by Japan. So if all of a sudden this dynamic that Japanese assets start to look more appealing and we see them starting to sell treasuries, sell bunds, sell Australia treasuries, selling gilts in order to repatriate it, there's a lot of bonds that are vulnerable to this kind of move. And given they're such a huge investor, Francine, it really does not take much in their asset allocations for the world to feel the reverberations of what's happened.
Yeah, that's certainly true, and what, of course, our guests have been saying all morning. Valerie, thank you so much for the great roundup from the BOJ. Coming up, members only. Twitter will restrict voting on company policy to paying Blue members. More details to follow. This is Bloomberg.
Has changed everything. People are changing the way they work and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open. We are 43 minutes into the European trading day. This is the picture across the board. Stocks and bonds actually slumping on the back of that big news from the BOJ. Thank you for everyone who's writing in saying today is actually quite an interesting day. Of course, they slumped in the wake of the Bank of Japan's unexpected adjustment to its yield control policy, and then a lot of discrepancy about how far maybe the person that will become governor after Governor Kuroda steps down in April and what he'll do with that policy. Now, onto technology, and Elon Musk says Twitter will restrict voting on major policy decisions to paying Twitter Blue subscribers. Now, that comes just a day after 10 million people, or 57.5%, voted for Musk to give up his role as head of the social media company. Joining us now is Matt Bloxham from Bloomberg Intelligence. So, disclaimer, I did not vote, Matt, on that. I mean, I follow, but I never vote. So what's happened since the poll closed? I feel like everything.
Everything and nothing, to be honest. Specifically on that poll about whether he should continue to be CEO, we've not heard anything official from Elon Musk. As you said, there has been some movement on this voting around major policy decisions, which initially they said anybody on Twitter could vote on, and now they're saying only if you're a Twitter Blue subscriber, you're paying $8 a month, will you be able to take part in those polls going forward. So, you know, there's a twist every day, it seems, with the Twitter story. So I'm sure there's going to be one or two twists with the CEO position. Maybe he'll change the poll retrospectively that it's only people that are Twitter Blue subscribers that whose votes count. Maybe he'll honor it, but kind of, you know, even if he honors it, he's still going to be in the background. He's still the biggest shareholder of Twitter. He's still going to be calling the shots, even if somebody else is notionally CEO. So I think day to day, it's not going to change a huge amount about his influence over Twitter. And, you know, I don't think he can help himself by tweeting every day anyway. So I think his influence is still going to be there, even if it's in the background.
But I mean, I have to say, if you're looking for a stable company to invest in, this is probably not it, because there's always a twist and turn. Does the market think he's going to step down? And even if he has influence, if he stops tweeting every day, is that something that, you know, brings advertisers back in?
I think there's a long way to go for advertisers to kind of regain their confidence in this platform. And I think, you know, right now, lots of them are thinking, what is this platform? Is it a safe environment to be advertising, particularly as they've kind of scaled back a lot of that kind of safety protection team that they had? I mean, I guess the litmus test really is what's happening with the Tesla share price, because ultimately that's the listed security which potentially suffers the consequences of a distracted Elon Musk. And so I think, you know, if you start to see, obviously there's a lot of other things going on with the Tesla share price, but if you start to see some recovery in that may be a signal that Tesla shareholders are getting reassured that actually his focus is shifting back to that company. And he did, you know, admittedly say when he first took over Twitter that it was going to be his primary focus for a short period of time, but once it was fixed, he would kind of revert back to his other businesses. And obviously he's got SpaceX too, which is doing
okay. I mean, it's doing pretty well, right?
I mean, it's a well-established business. Obviously, the big issue for him is, you know, this kind of Mars mission, which I think has been a bit more challenging over the last 12 months. I think that's definitely some way behind where he would have liked it to have been at this point. And so I think, but you know, I think he would want to put his focus back towards SpaceX and to Tesla. in the coming weeks and months.
You're basically like chief correspondent for Elon Musk. Do you ever get any sleep? Or just on Twitter all the time?
Yeah, what's sleep?
Sleep. Who knows sleep? Who needs sleep? Matt Bloxham, thank you so much, our senior media and technology analyst at Bloomberg Intelligence. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. A House committee has recommended Donald Trump be prosecuted for his role in the January 6th assault on the U.S. Capitol. The committee voted unanimously to refer Trump for prosecution by the Justice Department on 4 criminal offenses, including insurrection. It's the first such referral of a former U.S. president, adding to the legal and political troubles plaguing Trump's 2024 re-election bid. European nations have reached a deal to cap natural gas prices at 180 euros per megawatt hour. It ends months of political wrangling over whether to intervene in an energy crisis that has risked pushing the region into a recession. The cap is significantly lower than an earlier proposal by the European Commission, which would not have prevented the price spikes seen earlier this year as Russia curbed gas supplies. FTX co-founder Sam Bankman-Fried's preparations to be extradited to the US appear to be back on track. Bankman-Fried told a judge in the Bahamas he'll end his fight to avoid being sent to the US to face criminal charges over the collapse of his crypto empire. But his local lawyer said he wasn't aware of the plan. The hearing was adjourned and Bankman-Fried returned to jail. Now it appears that he and his lawyer are on the same page. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Francine.
Laura, thanks so much. Laura Wright in London. Coming up, Kuroda curveball. The Bank of Japan shocked markets with an adjustment to its yield curve control program. We discuss the changes and the market reaction next. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Welcome back to the Open, everyone. 52 minutes into European trading day. It is not a dull day on the markets. The Bank of Japan has shocked markets by adjusting its yield curve control program, and we're seeing European stocks down on the back of it. Now, the central bank will now allow Japan's 10-year bond yields to rise to around 0.5%, up from previous limit of 0.25%. Now, the change has sparked a jump in the yen and Japanese bond yields. So joining us now is Paul Dobson, our executive editor for Asian markets. Paul, wow, what a day. I mean, no one was really expecting the BOJ to go that far. Is the market now pricing too much in?
Oh, no, I'm not sure that we're pricing too much in at all. You know, I think, as you rightly say, this was a big surprise. The BOJ likes to surprise. It's got a bit of a history of doing that. And so this caught most of the market asleep at the wheel. It did produce a very big move in markets, both in the bond yields and also in the currency markets and across global asset classes too. But, you know, I think the market will see this as the first sort of sign or crack in the armor of the BOJ, which has been, you know, keeping these interest rates low for so long now. And now the market smells weakness. It's going to go after that, most likely. You know, we already have a story out there talking about some of the winners who've been betting that the BOJ would shift. You know, a long-term bet, there's not something that they put on in the last few days or necessarily were hopeful of happening today, but they knew that it was coming. And now that they sent that there's a move, the likelihood is that they're going to continue to pile into that and exacerbate things further.
But Paul, is this a sort of policy normalization, or is it just because of the transmission mechanism?
Well, if you ask the BOJ, they will tell you it's all about, you know, market functioning, allowing the bonds to trade properly. You know, it had got to that point where there was no turnover anymore except for the BOJ buying. The market had stagnated. By allowing a little bit higher yields, it allows a little bit more liquidity, a bit more two-way flow in the bond market. Theoretically, again, I don't think the market is going to believe this. I think that the market senses the BOJ is getting closer to that exit door. You know, there's been some competition or some concerns, rather, about the weakness in the yen over the summer. Some yen strength is probably being seen as a good thing for the economy. We've got some inflation already. We're higher than the BOJ target. We're looking for signs of wage inflation as well. If we get that, with Kuroda leaving in the middle of next year, the investors are going to start, you know, expecting that will be the turning point, the pivot for the BOJ to go more hawkish, just probably at the same time as the rest of the world is getting a little bit more dovish again.
So, Paul, what are you looking at? You know, this will likely move also because some of the Japanese investors are huge buyers of treasuries, but also European bonds. How do you expect that to move in the next couple of weeks?
Yeah, exactly. So I think this is another thing that means that it's going to be an extended move, Fran, rather than immediate knee-jerk reaction and then correct again. Because the Japanese have so much money invested all around the world, not just in the European bonds and the treasuries, but in, you know, carry trades with the South African rand, the Mexican peso, that kind of thing. Slow asset pools that are going to take time to flow back home. But if people suddenly see that they can get a better yield in the Japanese markets, if they favor their home markets again over those abroad opportunities and start to repatriate more of those funds, then it will start that long-term process to lead to more yen appreciation. I think that's the risk that the market is looking at. Higher yields globally, maybe, as the BOJ provides that trigger, and then maybe, you know, a little bit more yen strength as we dribble that cash back into the economy.
All right, Paul, thank you so much. Paul Dobson, their executive editor for Asian markets in Singapore. Now, let's also look at some of the other things to watch out for today. 7 a.m. UK time, we'll get German PPI. Canada retail sales numbers will come out at 1:30 p.m. this afternoon. So the German PPI, of course, are figures I think that we already got this morning. 2 p.m., we have U.S. building permits and housing starts, your area consumer confidence data will also be out at 3 p.m. And then shortly after 9 p.m., Nike will report a second quarter earnings. Just for that, PPI figures out of Germany, actually much worse than expected, minus 3.9% for the month of November. We were expecting a minus 1.7 figure. Now that's it for the European Market Open. Surveillance Early Edition is up next. This is Bloomberg.
appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
Good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance, early edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. BOJ shocker. Governor Kuroda stuns the markets by adjusting his yield curve control policy, signaling the central bank may be inching towards normalization. Well, traders jolted. The Bank of Japan's surprise sends the yen to its strongest level since August, while government bonds and global equities slump. I think also we have a bit of jolting right here, but criminal charges as well. A House committee recommends that Donald Trump should be prosecuted for his role in the January 6th assault on the U.S. Capitol, the first ever referral of a former president. Now let's check in on the markets. Now, Treasury yields rising, global equities are falling overall after the BOJ really emulated central bank peers, something that not a lot of people were expecting, with a hawkish move that really lifted the yen. I mean, some of the moves that we saw overnight are really quite incredible. Yen, the highest in more than 4 months. That sent domestic bond yields 20 basis points higher. Now, on the back of that, European stocks opened about 1% lower, and we're still seeing similar pressures across the board. The S&P 500 futures actually regaining some of the losses, now only down 0.1%. Of course, until now, the BOJ had been the outlier among central banks, no more, and then it depends on what the markets are pricing. So we were just saying the Bank of Japan shocking markets by doubling a cap on 10-year yields, sparking a jump in the yen and a slide in government bonds. The Governor Kuroda says the move should not be seen as a rate hike. He was very clear on that. He does not think further widening of the yield band is also needed. Now we're joined by Hugh Gimber, global market strategist at JP Morgan Asset Management, and our team leader for EMEA Equity Services, Ksenia Galuchko. So thank you both for joining us. I mean, who said this week was going to be boring, Hugh, right? It was like we're kind of like getting ready with our mulled wines and Christmas pudding, and then Kuroda gets in there and says, actually, not so much. Is this normalization, towards normalization? Or do you believe him when he says, look, this is not it, it's just a market functioning?
I think it's very difficult to see how the Bank of Japan's current policy is sustainable, because clearly the markets have been shocked by the moves overnight. I think that was inevitable given the nature of yield curve control. You can only ever end it with a surprise to avoid the market trying to break that limit for you. But now looking forward, you read the statement, inflation is transitory, wage growth is low, we think this will wash out. I kind of think, well, where have we heard this before? It feels very difficult for the Bank of Japan to avoid needing to make further moves next year. But
the question, Ksenia, is basically, if you're a trader today, do you see this as like a Fed-type move, or is it like, you know, baby steps, BOJ style?
I think it's a continuation of the hawkish comments that we saw last week from the Fed and the ECB that really jolted stocks, which saw this 2-month tremendous rally from the September lows. We saw some bull markets in Europe appear. We saw the Dow enter bull market. So we saw this tremendous recovery. And last week, the central banks finally made clear that the markets were wrong, investors were overly optimistic, and they will continue with rate hikes despite the taming inflation. And BOJ is just the latest in a line of these major central banks.
But if it is just the latest, and I don't know, Hugh, then we're going to see a lot more from the BOJ. And of course, the market is also pricing that there's a new governor that could change policy come April.
Yeah, so this is really the big question now. We've heard rumors over the weekend around a change in the accord between the Japanese government and the Bank of Japan. I think this really sets the stage for the next move, which in my mind has to be an increase in that 10-year yield target, which is the next step. Previously, we thought that would have to wait until after the new governor takes over. I still think that's the base case, but markets are now going to be edging forward. It's not clear to me how this solves the Bank of Japan's problem in terms of trying to improve market liquidity, because really all they've done overnight is just bump up the limit at which yields are pushing against, and they're going to be forced to keep buying more and more to try and protect that target.
But again, Governor Kuroda said, look, the yield band is as it is. Do you believe them?
Well, it is for now, but it's that wage growth problem, right? This is where all of the central banks were really wrong in 2022, which is that they misjudged the pace at which wage growth is going to accelerate. And so wages are the key issue to track, but I do expect that Japan now has really met the necessary conditions to be tightening monetary policy. And so it's a question now of just when rather than if in terms of that next step tighter.
Yeah, and Ksenia, we also know, of course, that Japanese investors buy a huge amount of treasuries and European bonds. So what does it mean longer? Is this the story, certainly of the end of 2022, well into 2023?
Yeah, it's crazy because Japan is the world's largest creditor. So in strategists at UBS today said that now there will likely be exit from bonds in the US, Australia, and France as a result of today's move. So we might see some more selling pressure there and then more inflows into the yen bonds.
Yeah, so how long does that take, actually? So it makes it more attractive to get money back in the country.
It does, but I would say here, I think if we'd see a backup in US Treasury yields, that's going to be an opportunity for investors to be adding to fixed income. I think when you look at the path of the Federal Reserve next year, we have much clearer sight now as to where they're planning to end the tightening cycle. And with that, US fixed income looks very attractive at these kind of levels. So if we do see a backup in yields on the back of some repatriation, I think that's more of an opportunity to add rather than something to fade.
Hugh, is this like classic Kuroda? I mean, he's always wanted to surprise the markets, and I don't know whether it's a lesson in really doing a lot, but actually not that much. Because it's a surprise, the move is so much bigger.
Yeah, I think this is just the nature of this kind of yield curve control target. One of the most interesting statements from the Bank of Japan over the past few months was when they started to talk about how they would rethink exit strategies before they implement new policy in future. Right. Because you look back to the RBA earlier this year where the market just said, look, we know you're not planning to adjust yield curve control anytime soon, but we're going to do it on your behalf, basically. Yeah. And so this kind of no, and then bang, here we go, you get the move, was really the only way out for the Bank of Japan. I think it's more about the concept of yield curve control than necessarily their policy in particular.
Given the BOJ cracked, is this a defeat from the central bank?
Well, yes, inflation was way too high in Japan. So when a very dovish central bank like BOJ comes out with a hawkish comment like today's, it just means that central banks everywhere are forced to fight inflation despite all of their standard policies. And this is just another jolt for equity markets investors out there who were way too optimistic over the past 2 months. We saw yet another bear market rally, which is now coming to a halt. We're seeing the S&P 500, the NASDAQ coming off critical levels. They're now trading below the 200-day, 100-day, and 50-day moving average, and this downtrend might continue considering the hawkish comments from today.
So, Hugh, what does it mean for treasuries?
So, I mean, clearly the pressure on Treasury yields is going to be higher. But again, I think when you're looking at the relative value options within global fixed income today, US Treasuries are the standout market. We heard from the Fed earlier in the month that they kind of knew where they were headed now. You look at the ECB, you look at the Bank of England, you now add the Bank of Japan to the list of central banks where, frankly, there are much bigger questions as to how far they're going to have to move in 2023. So yes, this could add to sort of upward yield pressure across the board, but on a relative value basis, I think treasuries are the standout.
Okay, so how far do you think the Fed will have to hike? And again, it's if you listen to Fed officials, I mean, it's pretty clear is that inflation may have peaked, but it's not coming down without a little help of interest rate hikes.
That's right. So I think they do have further to go. I'd expect another 75 basis points, so 50 in February and then 25 in March. But I think the Fed now knows that the forward-looking indicators are starting to move in their favor. They just want to see really that coming through in hard data now, and hence they want another few months just to get a clearer sense of the picture, but the direction of travel is much more positive.
Xenia, there's been a clear shift in how much the markets are, or when the markets are expecting actually a cut from the Fed.
Yes, exactly. So I think we're now moving towards the second half of next year, because clearly, originally the markets did expect a Fed pivot to come at the end of this year or early next year. But now more and more strategists are saying that we're in for a very rough first quarter, at least for equities. And only after June might the Fed finally pivot and stop hiking rates. Because inflation, yes, it started to ease, but it's still very high. And the Fed doesn't want to make the mistake that was done in the 1970s when they cut rates too early before inflation actually came down.
All right, thank you both for joining us. Xenia Galuchko there from Bloomberg, and Hugh Gimberg, global market strategist at JP Morgan Asset Management, stays with us. Maybe we'll talk about equities as well. Coming up, EU member states strike a deal to cap natural gas prices, ending months of political wrangling. We'll have all of the details next, and this is Bloomberg.
Go. After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun. We are joined by UCLA quarterback Chase Griffin. Not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, EU nations have broken a deadlock and struck a deal to cap natural gas prices at 180 euros per megawatt hour to help ease the energy crisis gripping the bloc. Well, Bloomberg's Anna Shira-Vayeskaya joins us now. So, Anna, how exactly will this work?
The price correction mechanism will be triggered automatically if the front month European gas benchmark exceeds 180 euros per megawatt hour for 3 working days, and at the same time the European gas benchmark is more than 35 euros a megawatt hour above global LNG prices. It will be applied from the 15th of February and will place for 1 year.
So, Anna, is it going to be effective?
Now, it will be effective in a way of actually avoiding these extreme price spikes we saw in August and September. The level, the proof level of 180 euros a megawatt hour is much lower than the original proposal, and still it is significantly above the current prices, which are about 100 euros a megawatt hours. So we will see how that will actually help reduce price spikes. Now, will it be effective in terms of lowering supply into Europe? That's the biggest concern, because if the prices are higher somewhere else, for example in China, that supply could actually go elsewhere. So that's the biggest concern in the market at the moment.
So, I mean, there are a lot of concerns, Anna. When do we know if these concerns were rightly concerns because it messes up some of the things that we're trying to do, or whether it goes smoothly?
Yes, Francine, so that also depends on, for example, there is no any cap on demand, and Goldman Sachs already warned today that that could actually trigger consumption. And if you have increased consumption, but supply doesn't change, that actually tightens the market. And next year, we might see even a bigger shortage of gas in the European market. So the all attention is now on supply. Will we be able to fill these gas storages in absence of Russian pipeline gas flows? Will actually this price cap try and reduce the kind of spikes, but lower supplies into the region? That remains to be seen.
Thank you so much, Bloomberg's Anna Shiraevskaya there on the very latest on energy prices. Now we're back with Hugh Gimberg, Global Market Strategist at JP Morgan Asset Management. Hugh, first of all, on energy, I don't know whether the energy complex is really being priced in other than earnings. So I know it's part of the earnings complex, but should it have more weighting on equity movements in general?
Yeah, I think what's been interesting this year is that the energy outperformance has really not been a valuation adjustment at all. So when you're looking across the market at areas that could see valuation upside in 2023, I'd put energy as one of those categories. I think what we're also hearing from the news overnight is that this is a sticking plaster, right? This is a temporary price cap that doesn't go anywhere really to solving the medium-term problem. And so when we're looking across the market and trying to find pockets that have been oversold in 2022, climate-focused technology, I think, is one really exciting area for next year, because the medium-term solution here is not about price caps. It's about changing the energy mix. It's about moving away from gas altogether. And therefore, I think there are some really interesting entry points opening up, particularly if we start to see more stable bond yields next year.
But overall, are equity markets pricing in a global recession? It's unclear, actually, what's being priced in the markets right now.
Yeah, it's a difficult question. I think what we do know very clearly is that everyone is anticipating this recession. This is the most forecasted recession we've ever had. And therefore, to say that equity markets are going to be shocked by this next year, I think is really difficult. What I would say is that when you look across the market now, I think US growth is an area that still stands out as too overvalued, and with an area where you could see some further earnings disappointment. But there are value parts of the market, whether it's in the US or the kind of more value tilted regions such as Europe, where I think, yeah, there's lots of bad news now in the price. And therefore, yes, it could be a bad year for the economy next year, but it should indeed be a better year for the market.
Are there parts of the markets, though, where you worry about liquidity, like seriously worry about liquidity?
So the unwind of liquidity is still one of the big unknowns. But I think what we've learned over recent months is that the central banks are not going to allow their liquidity reduction to get in the way of their tightening plans next year. So the Bank of England have shown us the model here, which is that interest rate hikes are used to control monetary policy, and really the balance sheet is about financial stability. So look back to September, October, you get a shock in the UK bond markets, and those liquidity plans are parked. They go very quickly.
I mean, so some of the other, I guess, angles that we're looking at in news is, central bank divergence between, for example, the Bank of England and the ECB. I know they're trying to achieve the same thing, but they're going about it in different ways. How do you play sterling?
Yeah, sterling, I think, is fundamentally weak, quite frankly. And when you look at the Bank of England, they're in a very difficult position now because they've tried to go with this approach of tiptoeing and sort of edging gently to try and control inflation. And you look back at the meeting before last, they were really pushing back on the market's pricing for where they were going to need to get to in 2023. That's now gone out of the statement, but still, I think they have more catch-up to be made. And the challenge is that's going to weaken growth. So I think the backdrop for sterling next year is still pretty weak. I wouldn't want to be playing the kind of weaker dollar trend against the pound. I think the yen or maybe the Swiss franc would be better ways of doing that.
Do you buy any parts of the gilt curve?
I just think you have better opportunities elsewhere, right? If you're looking for a good insight into how central banks are going to behave, you now have that with the Fed, and I think the relative value offered by US Treasuries over UK gilts is very clear.
But on the Fed, much like a lot of the developed world, will really depend on whether the labor market holds strong. And that kind of makes or breaks the housing market and then everything that goes with it.
Completely. And coming back to your first question, it defines whether or not equities have priced in a big enough recession next year, because we need the labor market to slow in order to break the back of the remaining strong parts of inflation, particularly core services in the US. Now, some of the forward-looking indicators are now heading in the right direction. We're seeing some slowdown in wages, but a couple of weaker non-farm payroll prints in the early part of next year would be a really good way to start 2023 to give more clarity about when the Fed can really pause.
So tactically, do you go, are there certain sectors that look attractive right now, or do you go for individual company names?
Yeah, so from a sector perspective, I still think you want a bit of a value tilt. Yeah. So energy is one that we've talked about. I still think the banks have further upside to be priced in terms of this higher interest rate environment. And I'd also think about a lean towards dividend payers. It's one area of the market that's really not performed very well this year, but payout ratios are very low. We've seen previously that high inflation environments tend to be where that kind of income tilt really works. So that would be another way that I'd be looking at adding some defensive characteristics to an equity portfolio when your traditional defensives like utilities or staples or healthcare are the expensive defensives that look a lot more challenging today.
Hugh, thank you so much. Hugh Gimber there, Global Market Strategist at JP Morgan Asset Management. We'll see you in 2023. I love saying that. Coming up, members only. Twitter will restrict voting on company policy to paying Blue members. More details to follow. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. A House committee has recommended Donald Trump be prosecuted for his role in the January the 6th assault on the Capitol. The committee voted unanimously to refer Trump for prosecution by the Justice Department on 4 criminal offenses, including insurrection. It is the first such referral for a former U.S. president, adding to the legal and political troubles plaguing Trump's 2024 re-election bid. Now, European nations have reached a deal to cap natural gas prices at 180 euros per megawatt hour. It ends months of political wrangling over whether to intervene in an energy crisis that has risked pushing the region into a recession. The cap is significantly lower than an earlier proposal by the European Commission, which would not have prevented the price spike seen earlier this year as Russia curbed gas supplies. FTX co-founder Sam Bankman-Fried's preparations to be extradited to the U.S. do appear to be back on track. Bankman-Fried told a judge in the Bahamas he will end his fight to avoid being sent to the U.S. to face criminal charges over the collapse of his crypto empire. But his local lawyer said he wasn't actually aware of the plan. The hearing was adjourned and Bankman-Fried did return to jail. Now it appears that he and his lawyer are on the same page. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Quite a lot going on. Understatement of the year in terms of that BOJ shocking with a boost to target the yield ceiling. Now, this is what we know so far. Of course, we've had some huge moves across, across the globe, really. We also have the first economist from Bloomberg Economics talking about what he thinks the take overall is. So he basically goes back saying that the move shook the markets, the yen and also long-term bond yields took off, stocks bombed. The implication, of course, we know go far beyond Japan with the BOJ, the last advanced economy holding out in a global monetary tightening shift, now letting the benchmark yield trade higher than before. And of course, the shock will echo across global financial markets, not only for today, not only for the rest of the year, but probably into 2023. Coming up, we talk Twitter, members only. Twitter will now restrict voting on company policy to paying Blue members. We'll get more on all of this with Richard Windsor, Radio Free Mobile founder. That's coming up shortly, and this is Bloomberg.
COVID has changed everything. People are changing the way they work and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
BOJ, a shocker. Governor Kuroda stuns markets by adjusting his yield curve control policy, signaling the central bank may be inching towards normalization. Traders jolted. The Bank of Japan surprise sends the yen to its strongest level since August, while government bonds and global equities slump. Plus, criminal charges. A House committee recommends that Donald Trump should be prosecuted for his role in the January 6th assault on the U.S. Capitol, the first ever referral of a former president. Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So we continue with today's big story. That's the BOJ's surprise move. Let's bring in our markets reporter, Valerie Teitel. So, Valerie, good morning. Talk to us about some of the broader impact, of course, of the BOJ's move.
Yes, thanks, Francine. I want to talk about what happened in Japanese front-end rates. Kuroda, again and again in the press conference, tried to say that this is not the beginning of a tightening cycle, that this shouldn't be viewed as a rate hike, but the market clearly took it the other way. 2-year, 1-year swaps, it's a good proxy for where forward interest rates will be in 2 years' time, rose nearly 20 basis points. This is the beginning of the market really pushing on the Bank of Japan. They are trying to price in a full hiking cycle. We might not really get that signaled from the Bank of Japan until April. That's when Kuroda steps down. But this is a big deal, Francine, and I'll tell you why. A lot of Japanese investors own foreign assets. They're one of the biggest holders of treasuries. When moves like this happen in the front end, the way that they hedge their assets to bring them back home, to bring the returns on their assets back into Japanese yen, they start to look less attractive, meaning treasuries, bunds, gilts, all these things which we know Japanese life insurers hold could look vulnerable to repatriation of flows.
Yeah, so how long would that take? And if you look at globally, are Japanese investors actually big enough to have a big impact on markets?
Yeah, so Japanese investors, they're very large pension funds, and we know that they move slowly. So this could definitely be a story that could eke out over Q1, Q2, or maybe all of 2023. But definitely, if you look just at the life insurance industry, $3.5 trillion of assets they own. And as I mentioned, they are the largest foreign holder of treasuries. They're also very involved in bunds and gilts. So if we start to see just a small asset reallocation, there could be huge pressure on these global yields to rise as they repatriate it back into JGBs.
All right, thank you so much, our markets reporter, Valerie Teitel. Now, Elon Musk says Twitter will restrict voting on major policy decisions to paying Twitter Blue subscribers. That comes just a day after 10 million people, or 57.5%, voted for Musk to give up his role as head of the social media company. Well, Alex Webb of Bloomberg Quick Take and Richard Windsor, founder of Radio Free Mobile, joins us. Well, they both join us, actually. First of all, Alex, just run us through what happened. So there's this poll in saying, like, I will abide by it. If if you want me to step down. And then people voted for him to step down, and he says, I'm going to change the rules.
Yes, exactly. You've characterized it shortly what's happened. He also then responded, look, we can only guess what he's sort of thinking by his tweets. There were a number of tweets from people saying that, oh, this looks like maybe some bots contributed to this voting. Yeah. Therefore, perhaps you should change the voting system so that actually only people with verified Twitter Blue accounts can contribute to these sort of things. Is he trying to back out of it? Quite possibly. The kind of focus here that we need to look at is really Tesla stock, because that's the main thing that actually has an impact in the public markets.
Yeah, Richard, have you been banned from Twitter yet?
No, not yet. I think though this was the way we look at this is that it was basically resignation by remote control. I think he had a very good idea of what the outcome was going to be before he decided to actually put the poll on Twitter. And I think he's done it pretty much as the other guest mentioned, is he's receiving some heat from his shareholders. He's not paying enough attention to Tesla. The performance of the stock has been terrible, so he really needs to refocus back where his attention is needed.
But do you think, Richard, that he'll step down? And does it really make a difference if he steps down? Because he's still majority shareholder, he's still going to be in control.
I think that's exactly right. I think you hit the nail on the head. I think he will step down. I think he will appoint another CEO. But at the end of the day, he is the majority shareholder. He controls the company just like Mark Zuckerberg controls Meta. So I don't think in terms of policy an enormous amount will change. What might change is the nature that policy is implemented. Since he took over, it's been very haphazard, a little bit crazy, up and down, back to front. I think that it may become more organized going forward.
Alex, him no longer being chief executive doesn't mean that he won't tweet.
No, and it doesn't also, as Richard suggests, it doesn't mean that he's not going to be very hands-on. He's just put, well, he's not personally put $44 billion in, but the sticker price was $44 billion. He's got a heavy, vested interest in this company succeeding. That also poses some of the challenges. Well, who's going to come in as CEO, chief twit, as Elon likes to call it, if you've got Elon breathing down your neck constantly? I think the key thing here is, though, if you look at Tesla shares had gained a little bit on the expectation he would step down. Since then, they have paired some of their gains with perhaps the market sort of realizing some of the realities of this, that he's not immediately stepping down, one, and secondly, he's likely to still be heavily involved no matter what.
Can you imagine being chief executive with Elon Musk as biggest shareholder? Richard, would you do it?
That's a good question. My favorite choice is actually Sheryl Sandberg. Number one, she's had Mark Zuckerberg breathing down her neck for more than 10 years, so she's used to it. And two, she did such a great job at monetizing the Facebook app when it went mobile. I think she'd be a great choice.
But Richard, how do you monetize Twitter right now? And I know we're getting also bogged down in, like yesterday, I couldn't believe it. There were icons that were square and not round, and it kind of put me in all sorts of like tizzles and frazzles. How do they get back on track?
Well, the problem is Twitter, as it exists today, is actually very well monetized. It generates an awful lot of revenue for what it really does in terms of traffic. So the answer is you've got to think of something else. Subscriptions is a possibility. I actually looked at this possibility years ago, and it is viable from Twitter's perspective, not from Google or Facebook's perspective, but Twitter, you can actually do it. That is one way of doing it. The other way, of course,
is this a good business? Yep.
Sorry,
is this a good business?
Twitter has 10% of the users of Facebook, and each of those users generates 10% of the revenue. So the average revenue per user at Twitter is 10% that of Facebook. So that perhaps is what Richard alludes to when he talks about the possibility of having a subscription model. The upside of bringing a subscription model in is greater for Twitter than it would be for Facebook, which generates in the order of $200+ per user per year in the US. That means that it's generating significantly more than $10 a month from each user. If you're looking at a $10 a month subscription for Twitter, that's upside. It would not be for Facebook, so that's why the difference comes in.
Sorry, Richard, I rudely cut you off.
No, sorry, I was going to say was the other opportunity is this whole super app business that he has mentioned a couple of times. This really is a cut and paste of WeChat. WeChat in China is effectively used for running almost your entire digital life. And if it can internalize all sorts of other activities inside Twitter as a super app, then the monetization opportunities will be greatly enhanced.
I mean, that is a tremendous opportunity if they get it right, but there are sort of three obstacles. You have like the you need developers building for that platform. They have far fewer users than do Facebook, than do Apple or Google. That's where developers are going to concentrate their efforts. And secondly, you need a payments tier to glue all this stuff together. That's a huge ask. It was maybe a bit easier when Jack Dorsey was CEO because he's got the block relationship. And thirdly, regulators do not like it when you leverage strength in one market to generate strength in another one. That's why Google's paid billions of dollars of fines over the past decade or so. That is the entire business model of a super app. You're taking one strength and generating other out of it. So if anybody could do it, maybe it's Elon. It's still a big ask.
Yeah, but Richard, at the same time, you need to trust. I mean, anything that's with banking, you need to trust, right? You need to trust that you don't get kicked out of the platform. You need to trust that you're, you know, that somehow it's not a volatile environment that Twitter currently is. So if there is still ambitions to be a super app, how long does that take, given the current situation of Twitter?
I think it take a very long time. I mean, it took WeChat the best part of 8 years, and I think Alex is absolutely right to identify those hurdles, and the hurdles are, quite frankly, massive. And you can't just say, hey, because it works in China, it's going to work in developed markets. And again, you're absolutely right to point out the whole payments issue is going to be very, very important. And so it'll take a long time. It's by no means a certainty. So, you know, my balance would probably just say it wouldn't work, but it is an opportunity for him to actually return some value for the 44 billion invested.
I suppose one thing that we're sort of omitting here is we haven't spoken about advertisers. You know, if you're going to build a product like this, you need to pay the bills you currently have. Twitter has something like in the previous 12 months, $3.5 billion a year in running costs. It also has on top of that now $1.2 billion in debt that needs to service. Advertisers are fleeing the platform. If you firstly need to retain those guys, need to keep you know, with the money coming in, then that gives you the base on which to start thinking about these slightly more ambitious projects. And at the moment, the basics are not being done well.
Richard, I'm a subscriber to your newsletter, which I have to say is fantastic. And overall, of course, every day you talk about Meta and some of the other technology companies. We've seen a number of job losses across the board. What's 2023 going to be like?
I suspect 2023 is going to be a little bit more of the same, certainly in the first half, and I think a lot depends on what happens with interest rates. Now, the last couple of CPI inflation numbers have been a little bit encouraging in terms of inflation starting to come back, so maybe things start to stabilize in the second half. So I think you could see a difficult first half, maybe things start to stabilize in the second half, and we start to see some demand come back from the consumer now that inflation hopefully would be on the back burner.
There's a key number when it comes to the job cuts, and if you look at Amazon and Meta in particular, they might have grown revenue significantly until this year. Meta's slowing down a bit, but grown revenue significantly over the past few years. But a number that has actually come down is revenue per employee. So that both Amazon and Meta, and this isn't the case with Microsoft and Apple, they significantly expanded headcount faster than they could grow revenue. Then we've seen the share prices come down, partly because of those interest rate factors that Richard was talking about. And so they're looking to say, well, what can we correct? Let's maybe correct this overhiring piece. Now, that's incredibly tough on the employees. It's not their fault, but it's the bosses kind of correcting some of their missteps.
All right. Thank you both for really a great panel. We'll get you back on together again. Alex Webb there of Bloomberg Quick Take, and Richard Windsor, founder of Radio Free Mobile. Now, coming up, more on the Kuroda curveball. The Bank of Japan shocks markets with an adjustment to its yield curve control program. So we discuss the changes, and of course, we talk about the market reaction. That's coming up shortly, and this is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
The volatility of the financial and capital markets seems to have declined temporarily, but it has increased again recently. The distortion of the yield curve has become very strong, so we made some adjustments today. This is just to ensure that yield curve control functions steadily and does not mean a beginning of a rate hike, tightening monetary policy, or reviewing YCC.
Well, that was BOJ Governor Haruhiko Kuroda speaking after the central bank stunned markets by doubling a cap on 10-year yields, allowing them to rise to around 0.5%. Now, the BOJ's move caught most traders off guard, with Japanese bond yields soaring to the highest since 2005 and the yen surging more than 3%. Now, the shift could mean a rise in global borrowing costs as higher yields also lure Japanese capital back home. Now, while the effect ripples across global markets, at least 3 funds stand to benefit from the BOJ's move. Blue Bay Asset Management is one of the funds correctly betting that Japan's central bank would relax its long-held cap on bond yields. Russell Matthews, senior portfolio manager at Blue Bay Asset Management, spoke with Bloomberg TV a bit earlier.
Now you face higher bond volatility. I think yields will need to rise in Q1, and we will stick with our short and JGBs for the moment, and just see how things play out and where levels get to. The other thing that I'll emphasize as well is that higher bond volatility, higher rates, more hawkish central banks, this all is not good for risk. And so, we've been cautious and have been taking down risk in general in the lead up to this. And I think now equities look like they are going to be potentially under some pressure here.
So, Russell, I want to follow up on a couple of things you said there. One is you're going to stay short JGPs because it's not too much negative carry, and even though you think it'll be tougher from here, it's an easy one to hold. But surely if you're saying there'll be higher yields, that'll make the yen trade harder. Does that mean that the easiest expression of this from here is actually to short global equities? Like, probably shorting E-minis is probably the cleanest play from here. Is that the way what you're kind of saying?
Well, not being an equity guy, I'm not going to, promise to be an expert on that. But that does seem to us to be a pretty obvious trade. I agree. But I think in the FX market as well, on the yen, I think that the yen will appreciate from here. We can look at 130 as a definite near-term target. But away from the yen, I think the combination of this more hawkish central bank a message is coming through, and I also just add in that the RBA was pretty hawkish this morning as well. So we've had this raft of hawkish central banks, and so away from the yen, I think that the dollar now comes back into focus. We've had a lot of speculation and anticipation that the period of dollar strength is over, and the market looks in much better shape for 2023.
Well, that was Russell Matthews, Senior Portfolio Manager at Blue Bay Asset Management, speaking earlier with Bloomberg's Danny Berger and Mark Cudmore. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. FTX founder Sam Bankman-Fried has caught his lawyer off guard with his plan to waive his right to fight extradition to the U.S., where he faces charges including wire fraud. Bankman-Fried's Bahamian lawyer told a Nassau court hearing he was now aware of that plan. The judge then adjourned proceedings settings until February, with Bankman-Fried ordered to return to prison. Now, the European Commission has warned Meta of a possible breach of antitrust rules over its marketplace service. The Commission says the company may be squeezing up classified ad rivals by tying the Facebook marketplace to its very own social network. The move paves the way for potential fines or changes to the firm's business model. The EU regulator has been investigating Facebook since 2019. Chinese banks have maintained their benchmark lending rates for a fourth month after the central bank last week kept its monetary policy settings unchanged. Some economists had expected a 10 basis points cut in the 5-year loan prime rate to help the embattled property sector. The PBOC has kept its key MLF rate unchanged since August, treading cautiously as officials abruptly lift COVID restrictions. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Coming up, the Kuroda curveball. The Bank of Japan shocks markets by adjusting its yield curve control program. So we'll get more on that and what to expect from central banks going into 2023. This is Bloomberg.
Go. After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun. We are joined by UCLA quarterback Chase Griffin, not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition of Francine Lacqua here in London. Now, the Bank of Japan, you all know by now, has shocked markets by adjusting its yield curve control program. The central bank will now allow Japan's 10-year bond yields to rise to around 0.5%, up from a previous limit of 0.25%. The change sparked a jump in the yen and a move higher in Treasury yields. Now, for more, we're joined by Jamie Rush, our chief European economist at Bloomberg Economics. Jamie, I mean, I love this story. You probably love it less if you're a market participant. You're probably hiding under your desk if you're on the wrong side of the trade. But actually, is this policy normalization or is this just, financial mechanics?
Well, I think what we need to recognise is the Bank of Japan faces a policy trade-off.
Yeah.
So it wants inflation to be higher on an underlying basis in Japan. It wants super loose monetary policy, but that's causing a conflict with the Fed, who obviously moving in the opposite direction. It's got yen depreciation, which it just doesn't like. So I think we should be thinking about it as a recalibration within this policy trade-off, rather than the start of like a major hiking cycle.
But so what does that mean fundamentally? If it feels, right, the market is repricing everything because they were the last fort not to do much, and even them are like swept in this global hawkish stance.
Yeah, and if you interact that with the change in leadership that's coming in April,
right,
then I think that's exactly right. So you don't know where this is going to end. And we've seen it happen at the Bank of England, we've seen it happen at the ECB, where what starts as a little chipping away becomes something fairly significant fairly quickly.
So, Jamie, talk to us also, I mean, what a lot of people kind of are now remembering, but maybe didn't realize overnight, is that Japanese investors and pension funds are huge. They're some of the biggest holders in treasuries, but also European bonds.
Yeah, I mean, so we're seeing a shift in the relative attractiveness of Japanese and European assets, right? And I think at the margin, it's going to make a difference. We're already seeing bond yields rise in Europe, which obviously complicates the ECB's task, for example. But I think we should remember the scale here. Unless there is a big change in policy at the Bank of Japan, yields have risen by far, far more in Europe than Japan.
So what does this BOJ move mean for the other big central banks?
Well, I think it just adds to the list of things to worry about slightly, doesn't it? So the asset prices are vulnerable to central bank policy, both at home and abroad, and we've just seen an additional risk put on the table with the Bank of Japan.
So the most interesting, I guess, bit in 2023 is, again, how markets interpret what Fed officials are saying. We could reach peak inflation, or maybe have even reached peak inflation, but be nowhere near the end of hiking.
Yeah, so I think our view is that we probably have reached peak inflation, Fed, Bank of England and the ECB in all three economies. And what we'll see probably is just a bigger emphasis on core, on the labour market, and much less emphasis on the risk posed to inflation expectations from headline. So I think that's the shift in focus that's going to happen. And we're going to see that kind of different inflation outlooks appear in 2023 based on those domestic circumstances.
But so, Jamie, what's the most difficult thing for you guys going into 2023? And you've been putting some really fantastic research out. Is it to see the difference between what the markets are thinking and what policymakers are saying? Or is it really more economics, kind of what the housing market does if the labor market crashes?
Yeah, so I think that, the housing market is one of the potentially pivotal things for 2023, isn't it? So you've seen globally asset prices have revalued as the interest rate environment has changed. That hasn't really happened yet in housing. And so it's how that plays out. Will it happen fast? Yeah. Will it happen slow? And we've seen in Sweden that you don't need the unemployment market, the job markets to tank for house prices to fall. So I think that you're right to flag that as a major risk.
But do you think we've reached peak inflation across the world?
I think so, cautiously. It's one of those things that you can say. You can say that 100 times this year and be wrong. But no, I think genuinely, unless there is a big further major shock on the energy markets, then I think we're probably there.
All right, Jamie, thanks so much. Jamie Rush there, our chief European economist at Bloomberg Economics. Now, Bloomberg Surveillance Early Edition continues in the next hour with Anna Edwards in New York, Danny Berger in London, and this is Bloomberg. what do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view. And I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
Central banks are telling us inflation is stickier than what the market is anticipating.
This seems to suggest that the political pressure is coming to bear. That's the increased probability that the Bank of Japan will be under pressure to bring in a new governor who will raise rates and get us out of this insane experiment.
It's probably a little bit early to call that we're moving to a full normalization, but this is a big deal and has the potential to spill over into other areas.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Keely Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. A surprise move by the Bank of Japan has the yen surging. The BOJ shocks markets by doubling a cap on the 10-year yield. Now it's up to the Justice Department. A House committee recommends that former President Trump be prosecuted for his role in the assault on the Capitol. And Elon Musk has second thoughts. The Twitter owner says only paying members will be able to vote on major decisions, following a poll calling on Musk to step down. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London with Anna Edwards in New York. Matt Miller is off, and Kaylee Lines is taking a much-deserved sleep-in, hosting the U.S. Close show later today. And Anna, here we thought it would be a boring week. We could just saunter into the Christmas period, but it is Christmas come early for the macro traders with the BOJ surprise.
Yeah, so much for the quiet week then ahead of the holidays, Danny. We certainly have some massive moves on markets to talk about, driven by the BOJ. Let's check out what was happening in the Asia session then, and this the epicenter of today's big news story around the BOJ. Are we starting to see the final piece of the global rate tightening cycle falling into place? Is that too extreme? Certainly the BOJ sees it differently. Governor Kuroda saying that increasing the bandwidth for the 10-year JGB to trade in is not the start of monetary tightening, but the market sees it a little bit differently and does seem to be pricing it in that way. So this is the Asia-Pacific equity market, not down all that much, but the focus very much on Japan, as you see, down by 2 2.5%. If money is going to become increasingly expensive, if we are losing that funding currency in the shape of what's been going on with the Japanese yen, if that's going to be part of the narrative into 2023 or a little earlier than anticipated, then that is bad news for stocks, it would seem. The dollar against the yen, certainly worth mentioning. The yen then strengthening by 3.4%. Maybe the yen could have done with this help back in the middle of 2022, according to some of our colleagues on Markets Live blog. And maybe we need to see more of this. If the market was short yen, do we need to see more yen short covering as a result of what we've heard from the BOJ? The Japanese 10-year yield also moving on this. We see higher yields as a result of the market saying, well, we hear you, Governor Kuroda, but we think actually this is a start of something when it comes to yield curve control and move away from the policy that we've had up until now. Let's have a look at what this does to the US asset picture. And this is not just a Japanese story by any stretch. We're off earlier lows on S&P futures, but certainly our colleague on the Markets Live blog, Mark Cudmore, earlier on saying maybe actually through global stocks, this is this kind of purist way to play this risk-off move that we've seen from the BOJ, because maybe the yen-JGB relationship gets a bit complicated. We're certainly seeing the Treasury market taking this very seriously. So we see movement in 10-year yields higher, we see 30-year yields going higher, and this is, of course, because of the role that Japanese investors play in the Treasury market. And if they have more incentive to go back home, to repatriate that currency, then as a result, that leads to decreased demand for the fixed income products of the US government, as you see. Bitcoin, one of the only assets today not moving on this story, Danny, but it's in here nonetheless. 16,814 is where we trade, up by 1.4%. And I know that the BOJ news has been rippling through European markets, bond markets in particular, Danny.
It really has. I will kick us off with equities because much like the U.S., the worst of the losses have pared back a bit. Perhaps it does have to do with Kuroda saying that this is not abandoning easy policy, saying that they won't widen the band even further. But either way, much like you were showing, Anna, the ultimate impact is one of tightening financial conditions. If yields are moving higher, that means stocks sell off. Now, some regions are worse than others. For example, the FTSE 100 and the IBEX are basically flat. So it is the higher beta stock markets that are selling off, again, with this idea that it's the ones more exposed to the rate story. And again, along with just this idea with tighter financial conditions, it is funding currencies, the yen funding currency, which is taking a hit. If we lose that, then yes, as you pointed out, Anna, there are trades that perhaps need to unwind. Euro yen and sterling yen, both of those depreciating pretty significantly today, at least 3% versus the yen. Not only is it a story of losing some of these funding currencies, because after all, I mean, this carry trade, it's always been picking up pennies in front of a steamroller, and the steamroller arrived today. But it is also, Anna, as you pointed out, this idea of repatriation of funds. Japanese investors held so much of the world's sovereign debt. If all of a sudden you can get a yield at home, you need to readjust. So we are seeing German 10-year yields. Those are moving up by almost 8 basis points. And Anna, it is across the European sovereign space. We are seeing bonds take a hit.
Okay, so we're certainly seeing this across Europe. We're seeing the impact on the Treasury market. Let's talk about the BOJ and the move today. The BOJ's surprise move has roiled global markets, but at least 3 funds stand to benefit. UBS Asset Management, Schroders, and BlueBay Asset Management. Earlier on Bloomberg, we heard from Russell Matthews, lead portfolio manager at BlueBay, which had long predicted the BOJ's hawkish shift.
Do we think that this is just an isolated move? Absolutely not. This is the beginning of normalization. They've been increasingly struggling to hold, you know, their hard policy mix, the emergency policy mix. That's now sort of changed, and we're on the pathway to normalization, and the market is going to be pretty volatile as we progress along that path.
Russell Matthews there, a good day for BlueBay, and he was making those comments on Danny, on your earlier show, I know, with Mark Cudmore. Let's get to Paul Dobson, Bloomberg Executive Editor for Asia Markets, the perfect voice to speak to this morning on this subject. How significant for you, Paul, are these moves? Because we hear that the BOJ downplay the significance of this, saying this isn't the start of a tightening cycle, and even some economists saying, look, this is just a very small move, doesn't necessarily mean that we are seeing any kind of full tightening from the BOJ. How significant would you describe this move as?
I think very significant indeed, both for local markets and for global markets and for monetary policy in general. Anna, I think, you know, the BOJ may protest and may say this is all about ensuring that the bond market functions normally, but the market isn't going to hear that at all. The market's takeaway is we know that at some point the BOJ needs to start getting towards normalization. Inflation is above its target. We're waiting for that sign of wage growth to come through, and if we get that, then the BOJ may need to, start to relent on this incredibly easy monetary policy that we've seen in place for such a long time. So first sign, first sniff of danger, first hint that there's a move, the market is going to latch onto that, and that's what we saw in trading today with that big repricing of the government bond yield curve and then the yen as well. And comments like you had from the likes of Blue Bay saying, yeah, we like this trade, we were already on this trade, we're going to do more, we're going to go harder. We think that this is, a trend that we can get onto now. Shows you that the market is going to push. I think the BOJ will reiterate that it wants to be patient. I think the Japanese government will also talk about this in very measured, slow, baby steps, a story for the whole of next year. But the market will be impatient, and we know that it will push and test and probe every step of the way now that we've seen that first little hint that the BOJ is ready to relent.
Yeah, Kuroda trying to be very clear, saying that this isn't them abandoning easy policy. Paul, no economist surveyed by Bloomberg thought that this would happen today. We're in this really illiquid period. It is the run-up to holidays. What do you make of the fact that this happened today, that this happened now? What do you make of the timing?
Yeah, I think surprise is important when you're making a big shift in monetary policy in a way. If you were to give a signal that it might be coming, the market would take it as read that it was already coming. So why not go there, get out ahead, own that conversation, own the discussion like the BOJ managed to do today. It reminds me very much of when we were covering the Swiss bank way back when it had its cap on or a sort of limit on the Swiss franc's appreciation, and it had been telling us up to the week before there was no way that it was possibly going to relent on that, and then it pulled it away, surprise first thing, kind of in the morning without giving any indication that it was going to happen. I think that's the way the policymakers have to make decisions when they've got such a sort of ingrained policy in place. No point in hinting, or the market will take you down anyway. Better to get ahead of the market and announce and own it. And so that's why I think this surprise came. But I think it also has one other benefit, which is that by Kuroda sort of taking the hit, as it were, by saying, okay, we're going to make this move, then when he steps down in April next year and is replaced, it makes it just that little bit easier for the next BOJ governor to come in and think, okay, all right, new shift in policy, maybe we get towards a tightening cycle from here.
Paul, thank you so much. Bloomberg's Paul Dobson. Those with long memories reminding us this is a bit like 1989 from the BOJ. We'll get back to those comparisons later in the programme. Let's pivot to US politics. It is now up to the Justice Department to decide whether to prosecute Donald Trump for his role in the January 6th assault on the Capitol. A House committee voted unanimously to refer the former president for prosecution on 4 criminal offences, including insurrection. Democrat Representative Jamie Raskin of Maryland spoke at the committee meeting.
We propose to the committee advancing referrals where the gravity of the specific offense, the severity of its actual harm, and the centrality of the offender to the overall design of the unlawful scheme to overthrow the election compel us to speak. Ours is not a system of justice where foot soldiers go to jail and the masterminds and ringleaders get a free pass.
Emily Wilkins joins us, Bloomberg government reporter in DC. Emily, the significance of this move then from this panel, it doesn't necessarily have legal weight, hence why it's up to the DOJ now to decide its next move.
Yeah, the ball is absolutely in the Justice Department's court, and they've already begun moving on it. They do have a special counsel, Jack Smith, that was hired specifically to look into Donald Trump and his actions around attempts to overturn the 2020 election. Certainly, the Justice Department will be using materials that this January 6th panel have gathered over time. They've been working now for more than a year. They've done thousands of interviews at this point, and we're going to be getting a 161-page report from from them, really detailing a lot of the stuff that they can make public. And that's really going to go into whether the Justice Department will be bringing charges forward. But clearly this has already had an impact. If you look at the 2022 midterms, if you look at the candidates who most closely mimic Trump when talking about the 2020 election, none of them did very well ultimately in their races. And it's sort of just a signal from the American people. Most Americans are tired hearing about this. They don't believe that it's accurate, and they want the government to focus on other things. And it seems like if these charges continue to be something that come up for former President Trump, that could have a very big impact on his bid to be president in 2024.
Yeah, get into that a bit, Emily. What could happen that could change his ability to run for president?
So there is one of these charges, with the charge about aiding or assisting with a conspiracy. If Trump is charged, he hasn't been yet, and if he is found guilty and convicted of that, that would effectively bar him from holding the White House and holding that executive office. And so that is something that it depends exactly how quickly this case moves. Obviously, the legal process can take some time, but it's a huge thing that is hanging over Trump's head, and probably something that Republicans are thinking about as they move forward with deciding who their nominee is actually going to be. Other than that, it's really just going to be an impact in terms of the fact that these charges were even recommended and referred in the first place, as well as just everything the committee has rolled out. I mean, these have been highly choreographed hearings. There's really been a lot of thought and production value that's gone into it, all of it in the name of really convincing the average American individual that Trump had a very clear role in what we saw unfold on January 6th, and just how serious this was in terms of what his actions were and what the potential results could have been.
Yeah, well, it will definitely be interesting to see in the years ahead how this impacts public opinion for those presidential elections. Emily, thank you very much. Emily Wilkins of Bloomberg Government in Washington. Now, Elon Musk says Twitter will restrict voting on major policy decisions to paying Twitter Blue subscribers. That comes just a day after a majority of the 17.5 million votes cast in a poll were in favor of Musk stepping down as CEO. Joining us now is Bloomberg intelligence analyst Matt Bloxham. So, Matt, the poll spoke. Elon Musk said he'd abide by it. I mean, is this him backing away from it to some degree to say, oh, no, we only want paying members to have a voice?
Yeah, it's a good question, because obviously that announcement was made specifically around policy decisions. But yeah, there's this big question now about whether he's going to change the terms of reference for that poll about him staying on as CEO or not. To be honest, I think it's a bit of a sideshow, because whether he's CEO or not, he's clearly going to be the guy making the big decisions about Twitter's future, whether it's as officially CEO or just in the background. Yeah, he's had this obsession with Twitter as long as we can remember, even before he bought it. So I think, that's not going to change his influence over the company.
Yeah, Matt, good morning. Does the market think that he's going to step down? I mean, how do we gauge that? There's no Twitter share price anymore. I guess the Tesla share price tends to give us a bit of a view.
Yeah, exactly. And the Tesla share price was a little bit up and down yesterday. Ended more or less flat on the day. So I think that's probably the best kind of public market proxy you've got to the sense about what's going on, and maybe to some degree the fact that it ended up not really moving very much tells you that there is this sense that whether he has the official title or not, he's still going to be very focused on what's happening at Twitter in the coming months and years.
Okay, thank you, Matt. Matt Bloxham joining us there with the latest on Twitter from Bloomberg Intelligence, of course. Coming up on the programme, we're seeing a risk-off environment today. We're off earlier lows on stocks, but US futures flat to negative this morning, down by 0.3% on the Nasdaq futures, and we will talk about that with Maria Weitman. And this is the global impact of the BOJ's move. State Street Global Markets senior multi-asset strategist. She joins us. What impact on her assets as a result of this? And again on the BOJ's surprise move, Derek Halpenny joins us. MUFG head of research for global markets, EMEA and international securities. We'll get his take on the yen, the bond markets, the JGB markets, and what this does to treasuries as well, because this does have a global footprint, this story. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
The top names in business are on Bloomberg.
I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and the footprint of the organization.
So what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully and invest in efficiency and effectiveness, but also continue to spend money where you have competitive advantage.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London with Anna Edwards in New York. Now, we got the BOJ shocker this morning, doubling the upper band. And I want to talk about this idea of why now. Why would they change this now? Kuroda says it is to preserve market stability in order to transmit easy policy. However, the chart I have here for a radio listening audience is Japan inflation. It has been above Japan's 2% target since April. Yes, Kuroda says that he doesn't think on an annual basis it will get to 2% in 2023, but perhaps they are feeling the pressure from, again, inflation, which is running hot. And this is part of the reason why the market is struggling to believe the BOJ. So what will be the impact of that? Joining us now is Ksenia Gluchko, Bloomberg Equities editor. Ksenia, if this is a market that doesn't believe the BOJ, if this is the first step to abandoning yield curve control, what does this mean for a global bond market?
Well, this has been a total shocker, and none of the economists in the Bloomberg survey expected today's news. This is quite bad news for global developed bonds, which will be under pressure from this action as money flows back to yen and Japanese government bonds. And we saw the yen surge today as a result of this decision. So American, French, Australian bonds are likely to be under pressure from this. Now, rising bond yields is bad news for equities also. So equity investors were hoping for a reprieve after bond yields started coming down in the second half of this year. They were hoping there would be a reprieve for tech stocks, but that is just not happening. And this latest action is going to add pressure on equities.
Yeah, Ksenia, so it's interesting, the fixed income story then is about repatriation, about Japanese investors selling some global bond market products and buying JGBs instead, I suppose. But what about, where does that leave? So that's what's happening in fixed income. What about stocks? Because we seem to be actually off earlier lows on stocks. Yes, E-minis are down, but just 0.1%, Ksenia. So how damaging is this in terms of tightening global financial conditions and making it harder to make arguments to own stocks?
Yes, I thought that was very interesting because we started off this morning with quite a sell-off in European and U.S. equity futures, but they have now trimmed those declines, and U.S. futures are pretty much flat at this moment. I think Kuroda's statement that this does not equal a rate hike has really helped the sentiment. At the same time, we have seen quite a sell-off last week, which paired about half of the gains that we've seen since September lows for the S&P 500. So we can say that some of this negative sentiment has already priced in because of the very hawkish comments from the Fed and the ECB last week, which reiterated their commitment to rate hikes. So this latest made a statement from the BOJ possibly could already be priced in equities. But in general, if you look at the chart for the S&P 500 and the NASDAQ, they are trading below their key levels of 200-day moving average, 150-day moving averages. The downtrend continues. So the stocks are likely to stay under pressure or trend in this narrow corridor because we're also entering the holiday season and the volumes are likely to drop.
Yeah, despite the BOJ's denial then, interesting to see whether the NASDAQ does drop below that long-term trend line then that kicked in March 2009. Ksenia, thank you very much. Bloomberg's Ksenia Gulushko. And for more market analysis, check out the Market Live blog. MLIV Go is the function to use on your Bloomberg terminal. Plenty about the BOJ on the blog this morning. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Politics to the world of business. Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in New York with Danny Berger in London. Now, keeping you up to date with news from around the world, here's the first word. In the UK, more labour problems for the National Health Service this week. Nurses are on strike today after their first walkout last week. The Royal College of Nursing says it has a mandate from members to continue action for 6 months unless their wages are raised. Meanwhile, ambulance workers are set to strike Wednesday. FTX co-founder Sam Bankman-Fried's preparations to be extradited to the US appear to be back on track. Bankman-Fried told a judge in the Bahamas he'll end his fight to avoid being sent to the United States to face criminal charges, around the collapse of his crypto empire. But his local lawyer said he wasn't aware of the plan. The hearing was adjourned and Bankman-Fried returned to jail. Now it appears that he and his lawyer are on the same page. And negotiators in Congress have agreed to a $1.7 trillion spending bill. Now they'll try to ram it through the House and Senate to avert a government shutdown on Christmas Eve. The bill provides funding for government agencies through next September. It also includes more than $45 billion in aid to Ukraine. Coming up, we will talk to Maria Weitmaner, who joins us, State Street Global Market Senior Multi-Asset Strategist. What does she make of the overnight surprise from the BOJ? A big impact on FX markets and bond markets. What's in store for global equities? We'll get into that conversation shortly. This is Bloomberg.
We had a long-standing presence here in Houston for the past, I would say, 20-some years, since the Compact merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist. And I think we are witnessing right now a societal change in the way we work. You're no longer going to measure productivity in the same way as in the past. You're going to be focusing on output. Never mind what people do in their private times. It doesn't really matter to a company as long as the output is there.
HPE launched its Edge to Office hybrid work initiative in the fall of 2020. The new campus is designed with that flexible model in mind.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Count Under the Close.
Welcome to Bloomberg Crypto.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. A surprise move by the Bank of Japan has the yen surging. The BOJ shocks markets by doubling a cap on 10-year yields. Now it's up to the Justice Department. A House committee recommends that former President Trump be prosecuted for his role in the assault on the Capitol. And Elon Musk has second thoughts. The Twitter owner says only paying members will be able to vote on major decisions, following a poll calling on Musk to step down. Welcome to Bloomberg Surveillance, the early edition. I'm Danny Berger in London with Anna Edwards in New York this week. Matt Miller is off and Kaylee Lyons will be on air later hosting the U.S. Close show today. And Anna, it is a market that continues to reel from a surprise from the BOJ. Kuroda says that they're keeping their policy easy, that this is not a change, but the market's certainly reacting like this is a change.
Yeah, absolutely. The BOJ saying this is about increasing the sustainability of the yield curve control policy. So if you increase the band, it means we can keep it for longer. The market says, is it really about that, or is it the beginning of the end of the yield curve control policy? So there's a lot to talk about there. And in terms of the impact on global assets, Danny, there is a lot to discuss, because the yen often used as a funding currency. What does that therefore do to other global assets? For example, stocks. S&P futures then are a little bit weaker, off earlier lows. We had seen a lot more selling of global stocks as a result of this BOJ surprise move, and it is a surprise. The BOJ has a habit of surprising us. It has a history of surprising us. We'll get to that in a moment with our guest, Derek Halpenny. But this is where we are on US equities then. Not a big movement there. We are seeing big movement, I know, in the Japanese currency market and indeed in bond markets. Here's some of the movement we see in bond markets. These are the moves higher in the US 10-year yield, the US 30-year yield. So this is not just a Japanese story, which is important to mention. And the reason for that is because Japanese investors are such big holders of global bonds. And so if there are more reasons for them to send that money back home, then you might see them selling treasuries. And that's what we're seeing in today's session. Bitcoin up by 1.3% for what it is worth. Let's move on and show you what's going on pre-market movers. Tesla is one stock in focus once again. We were talking about this one yesterday around the Twitter story, and the focus on that continues. Senator Elizabeth Warren has been pressing the Tesla board over the actions they're taking around Elon Musk and Twitter, kind of trying to establish whether the board is putting in place sufficient management structure to distance the company from what she sees as a CEO who is distracted from running the Tesla business. Disney pretty unchanged, despite the fact that we've seen the Avatar debut a little bit tepid. The stock hitting the lowest, though, since March of 2020, so there has been some downward pressure on that stock. And Meta in the social media space, Zuckerberg saying that he, defending the business essentially against some legal claims. Those legal claims have suggested that the business is trying to profit at society's expense. There's a sort of ESG vibe to these legal claims, and the management of Meta pushing back against that very much. So, Danny, back to the BOJ and the impact on global markets.
Yeah, I was going to say today, Anna, despite some of the movement underneath the surface, on a surface level, it is yet again a macro story. It is happening in what is usually a very quiet week. You'd have to assume as a macro trader, even as an equity trader, you really just can't step away from your desk, because global financial conditions are tightening from the surprise move from the BOJ. As we've been saying, Anna, yes, they are claiming, or Kuroda is saying, that they are keeping policy easy, but if yields are moving higher, it makes it a more difficult environment for equities. European stocks off by 0.5%. They have clawed back some of the losses, but the losses continue when it comes to the currency space versus the yen. Anna, you were mentioning this, the fact that the yen is used so heavily as a funding currency. That means things like euro yen, Swissy yen, sterling yen, all of them declining at least 3% this morning. This is a broad repositioning that needs to happen also for those Japanese investors who are bringing money back home. So we're seeing bond yields, those are up in the 10-year yield about 8 basis points. Anna, it is hard to find an asset that is safe from the commotion caused by the BOJ this morning.
Yeah, absolutely. And let's focus in on the global market response. Maria Weitmaner joins us, State Street Global Markets Senior Multi-Asset Strategist. Maria, very good to have you with us. I want to start with the impact on stocks, which is not necessarily where we're seeing the biggest impact. We saw it in European stocks, as Danny was saying, and we did see it in US futures, paring that back a little. And I wonder if you think that that makes sense, because, the yen has been used as a global funding currency. The JGB yield curve control has been a policy then that has kept money cheap, maybe artificially, for global investors. Is this policy move then something that you would expect to put downward pressure on global stocks?
Yes, hello. I think, in general, we expect stocks to see a fairly challenging year going forward. So like little moves like that potentially moving along. But I would probably say that the biggest impact for stocks going forward is maybe less a policy move, but more move towards earnings-driven stories. So, when we're thinking about year ahead, is 2022 was a year of macro headwinds, and BOJ is one of those. And 2023, we expect a year of micro headwinds with corporate earnings really struggling. So I think it's more about earnings for the next year. But on a day like today, of course, market responding, particularly being very, very liquid.
If it's going to be about the micro story, Maria, how do you position for that? In other words, if I'm an investor, for example, who likes to buy passively, who likes to buy at the index level, will I be hurt if I'm not picking individual names?
I still think there are, I mean, picking individual names would probably be preferred, and kind of really understanding which companies are far better to, are in a better position to maintain the profitability, protect the margin. So definitely active fund managers probably kind of a place to go. If you are passive investors, I think like more defensive styles probably would be good, like dividend yield, maybe large caps. So that type of strategies probably will do better than more riskier ones.
So if there is going to be this earnings story, you want to be careful, you want to pick individual names, perhaps go for the defensives. How much of that is already priced into this market? Because Maria, it does feel like the warnings for this earnings season upcoming for 2023 are stacking up.
No, you're absolutely right. And to be honest, I'm really, really surprised. When I look at consensus earnings expectations, yes, you're right, they're coming down, but they're still positive. And particularly places like Europe, they're almost like double digit. That's really, really surprising. Like you say, well, we've been talking about recession, we've been talking about potentially more difficult times for corporates, but earnings expectations are still way too high.
Earnings expectations are too high. Are dividend expectations too high, Maria? Because I know that you like dividend payers, you're focused on dividend payers, but can you believe the estimates?
I mean, so dividends are, I mean, that's kind of a subset of markets. So that's usually more mature companies with better cash flow generation. So I think some parts of the market can potentially do better, and yeah, dividend companies we do like. So they're probably better protected.
And what about government debt markets then, Maria? As we sit here, we're digesting the BOJ's move, and clearly there's an impact on treasuries. How does this change the narrative for treasuries, for global bonds into 2023? Does it just add energy to the trends that are already in place, or does it cause you to pause?
I mean, we still probably would argue that Fed is the most influential central bank, and I mean, on the Fed, we'll probably argue that they're getting closer to the kind of policy targets, but there is still a big debate in terms of have they done enough to fight inflation, have they kind of slowed the economy down enough, and I think on that we're probably in a camp that there is more demand destruction that's needed. We still see very strong labor market, we still see enough consumer savings. We suspect, yes, yes, they're coming closer to the peak rates, but I would be very surprised if we see cuts this year or next year.
Maria, if I can kind of make this conversation a full circle here, if there's some degree to which Japan, even if Croda isn't saying it, is starting to look at inflation in Japan, is starting to express concern. If we're having that story play out in Japan, are we really safe to say that essentially anywhere in this global economy in 2023 that we can start to talk about pivots? Can we talk about it again if even Japan there is concern about continued inflation?
Yeah, you're absolutely right. So we have we're very closely monitoring online prices, and it's interesting, like you mentioned. So Japan is seeing second largest monthly increase in online prices. I mean, only UK is seeing higher. So yeah, definitely inflationary problems are beginning to build up in Japan. They were already seeing some kind of longer-term inflation expectations going up in the U.S. They're quite strong in like U.S. and Europe already. So I mean, to our mind is that there is still more work that needs to be done. And I mean, good thing about Fed and ECB, they've been very on the ball, and they've particularly Fed, so they've been kind of addressing those policies. I mean, Japan, obviously, we know that they've been on the back foot, and we saw what it done to Japanese yen. But yeah, global economy, I think labor market, consumer savings, those are really two concerns that kind of continue to support those price formations.
Okay, Maria, thanks very much for your time. Maria Weitmaner of State Street Global Markets. Thank you very much, and thanks for joining us many times, of course, during 2022. We'll see you in 23. Coming up on the program, the surprise from the BOJ. We will focus in on that once again. Derek Halpenny joins us, MUFG, Head of Research and Global Markets, EMEA and International Securities. We'll get his perspective, what this does to the yen, JGB markets and global assets. This is Bloomberg.
Humanity consumes 500 billion cups of coffee every year. That's almost double what we consumed a decade ago. And yet, coffee production is one of the most antiquated industries in all of agriculture. Climate pressures like drought, heat, and blight are affecting food producers in different ways all over the world, as climate change becomes something we can taste. In the past year, hundreds of thousands of acres of coffee plantations were wiped out. What's at stake are the livelihoods of around 125 million people. Because, if we're being honest, this is a plant that cannot hold on much longer in a changing climate.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it.
It's pretty much full-service shadow banking with nobody in charge.
The volatility of the financial and capital markets seems to have declined temporarily, but it has increased again recently. The distortion of the yield curve has become very strong, so we made some adjustments today. This is just to ensure that yield curve control functions steadily and does not mean a beginning of a rate hike, tightening monetary policy, or reviewing YCC.
Bank of Japan Governor Haruhiko Kuroda there downplaying the significance of the moves from the BOJ. But speaking after the BOJ certainly shocked markets by doubling a cap on the 10-year yield. The move helps pave the way for possible policy normalization under a new governor. Valerie Teitel joins us, Bloomberg Markets reporter, and can give us her take on this. Talk us through some of the broader impact then of the BOJ's move. Good morning, Valerie.
Good morning, Anna. I want to talk about what happened in front-end interest rates in Japan, and they're notably higher after this decision. And even though Kuroda said it again and again, this is not the start of a tightening cycle, that is clearly how the market is reading it. And why is that important? Because a lot of these front-end interest rates, the way these Japanese investors use these hedging instruments, it makes Japanese assets look a bit more attractive versus holding treasuries or holding bunds or holding gilts. And in my next chart, I can show you that, this tiny spike higher is probably just the first phase of a broader normalization in Japanese yields. And what could that cause? It could cause some real true asset reallocation. We know that Japanese lifers are one of the biggest global holders of foreign assets. They hold 17% of treasuries. And look, we know that central banks have been stepping back in terms of their bond buying. The Fed is no longer buying treasuries. The ECB is no longer buying European government bonds either. If Japan starts to step back, who are these buyers of bonds going to be? And we know we're headed into a big year for issuance.
Yeah, Valerie, I love it. You have a chart up there that it does look like the Japanese yield is just so small compared to everything else. But I mean, if you looked at it on your own, it is massive. One of the biggest jumps since the 2000s. Valerie, thank you very much. Valerie Teitel. I mean, early 2000s. I guess we kind of still are in the 2000s. Anyway, here to help save me from myself is Derek Halpenny, Head of Research for Global Markets, EMEA, and International Securities at MUFG. Derek, what a day to join us on, which I'm sure you thought would be a quiet Christmas day.
Possibly, yes.
So that's out the window.
Yeah.
But I do wonder, is there more of this to come? Do you see this as an isolated move, which Governor Kuroda has really tried to emphasize, or is this the start of normalization?
He has really tried, and obviously given the price action that you've just covered in the markets, I think he's failed. And it was always going to be very, very difficult because, of course, the narrative has been building for some time, and it's impossible to get away from the prospects of change when Governor Kuroda is leaving. There's speculation that Prime Minister Kishida always has a desire to move away from Abenomics, and in particular, the onus of the BOJ in implementing Abenomics. and therefore a reappraisal of the agreement between the government and the BOJ is still something that happens next year, and under a new governorship, a review of policy and then further policy changes. So this just obviously feeds that even more. And I think certainly the currency move, and again, showing the chart of these tiny moves on yen yields, when we know what's happened in broader markets this year, it's still relatively small. And the scale of the move in dollar yen, 3.5% to the downside, is just anticipating more to come next year.
How much weaker could we see the dollar versus the yen? It's at 132 now.
Well, I think obviously, as we all say, it's not going to go in a straight line. But when we plug in values that we think we could get to next year for treasuries in the US, assuming a cut by the end of next year, the 10-year JGB at 50 basis points, positive 2-year on JGB, and a couple of other variables that don't change very much, you still get dollar yen going to about 125. So I think that's ultimately where we're going to get to before we get some equilibrium. But we do see the dollar coming back a little bit in Q1. So, 3.5% to the downside today is pretty chunky based on what's happened in rates. But, I think ultimately that's where we're going to go.
So 125 on dollar yen. I wonder if this reminds us, Derek, of the way that the BOJ does have a habit of surprising. Those with long memories have been pointing out that there was a surprise actually on Christmas Day back in 1989 from the BOJ. What do you make of the timing of this? The fact that Governor Kuroda is doing this when markets are probably pretty thin, when many people are distracted by holiday preparations?
Yeah, I think timing-wise, now we had argued it wouldn't happen today, although I did argue to our clients that we were in a scenario, including the fundamentals in Japan, which we could possibly touch on, but in terms of the market scenario, now was a logical enough time to consider it, purely because global inflation looks to have peaked. We've had 2 compellingly weaker than expected CPI reports in the US, and 10-year US Treasury yields are down 60-odd basis points from the highs. So if you want to raise the band in which you can trade without having to immediately fight the top end of that band, there is a logic to the timing. And I think that's one of the reasons why the action was taken today.
Okay, and in terms of this being the start of something, you were setting out the narrative that this just feeds, Derek. A lot of people were saying if you're going to abandon yield curve control, this was in weeks and months gone, people said if you're going to abandon yield curve control, there's no way to half do that. You've got to follow this policy or not. Have we seen Kuroda try to find some kind of middle ground here?
Well, I think he has essentially by announcing the other measures today as well, which is, of course, a ramp up in JGB purchases, including unlimited auctions going forward and scheduled competitive auctions as well. And importantly, across the entire curve. A lot of the buying this year was in the 10-year sector alone, but of course, they nearly own all of the 10-year sector. So they've had to broaden it out, and what they hope to achieve is a more normalized curve to bring back some more normal market functioning. But having that increased purchases of JGBs, I guess the BOJ is hoping it diminishes the appetite for a very quick test of the upper end of the range.
There does feel some irony to making these moves for the sake of financial stability, but then because of those moves, having to buy more bonds to make sure there's financial stability.
I guess. I'm assuming perhaps he's hoping the communication of being able to do it means they won't have to, which of course, on many occasions, the unlimited purchases that are there at the moment, they haven't been using them. So.
Right. Well, quickly, Derek, I do want to get this in because one of the things Kuroda talked about was this idea of China actually being something which would act as a disinflationary force because of more COVID among the population, of more supply chain issues. Do you think that's the right way to look at it, or is it an inflationary force once the reopening happens and there's more demand from that?
I think, clearly when you look at measures of global supply chain constraints, we've seen a dramatic improvement. And now, goods inflation everywhere is falling, and particularly we see it quite clearly in the US. So I think from that perspective, if we move to a reopening, to me, it's demand. It's a change in the demand conditions, and ultimately could feed into inflation. If we have further problems over the short term, obviously that could lead to some, deterioration in those supply constraint problems again. So I guess it matters in terms of the extent of the problems that emerge in China.
Yeah, and on that subject, we've seen VW, just a story dropping this hour, saying that VW has been forced to rethink its production in China as workers fall sick. So that's the sort of short-term twist on this. Derek, thank you so much for joining us. Derek Halpenny of MUFG, helping us to understand the short and the long-term implications of what we've heard from the BOJ. Coming up in the next hour, Win Thin joins the team, global head of currency strategy at Brown Brothers Harriman. We'll get thoughts there on the yen. That's at 6 a.m. in New York, 11 a.m. in London. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London with Anna Edwards in New York. Now let's take a look at some of the things that are on the schedule today. In the UK, Chancellor Jeremy Hunt speaks in the House of Commons. That'll happen at 6:30 a.m. Eastern. U.S. data due also includes permits and housing starts at 8:30 a.m. Euro area consumer confidence data, that will be out at 10 a.m. And UK Prime Minister Rishi Sunak appears before Parliament's liaison committee. And then later today, we will get Nike earnings shortly after 4 p.m. And I know I should be caring most about all those UK things, but I gotta say, I think Nike will be fascinating, given it will give us a glimpse into how big of markdowns they'll have had to take this holiday season and how things are shaping up in China, whether there is demand there and how COVID, the resurgence of which after reopening is impacting.
Yeah, absolutely. A lot to be said about China, the way that this impacts the demand story globally, but also, as you referenced earlier in our conversation with Derek Halpenny, supply chain disruption and what that does to global inflation. Thinking about that takes us nicely back to the BOJ, where we started this program, something we've spent a lot of this hour talking about, Danny. We talked to Derek Halpenny there. 125 is where he sees the yen could weaken too as a result of this policy.
That's the thing, Anna. This is a market that is very willing to push the BOJ, that is very willing to speculate that this is not the end of it. Even though Kuroda has said over and over again, this is not us easing. However, his term ends in April. It does seem like this market expects there to be more steps to abandoning yield curve control.
Yeah, absolutely. Sorry, and I should have said strengthen to 125, of course. And interesting to think how they cast this this policy change from the BOJ, saying this isn't hiking, as you suggest, saying that this is all about sustainability of the yield curve control. As we heard, though, from Derek Halpenny, the market sees it very differently, sees this perhaps as the beginning of the end. This is Bloomberg.
What are the biggest challenges for General Dynamics and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, only on Bloomberg TV and Radio.
The market is convinced and won't be dissuaded, I don't think, in a hurry, from the idea that the economy is slowing.
Most other economies are either slowing or entering into recession.
As you get into 23, peak inflation becomes your number 2 concern, and you get into a growth discussion.
I think the economy will continue to grow through the first quarter.
The floor has been set, and the worst is certainly behind us.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Surprise, surprise, BOJ surprise. Live from New York City this morning. Good morning for our audience worldwide on TV and radio. This is Bloomberg Surveillance alongside Tom Keene. I'm Jonathan Farrow. Dollar yen TK, it's a move of 3%. The BOJ making a shift on yield curve control.
Yeah, burying the needle. This is an historic moment, folks. It gives us a gift here. It's a quiet week before Christmas. We're wandering into 2023, but this was a shock. All the economists looking at this, John, nobody saw this coming, which is the best time for a central bank to act.
So we've got a new range, 25 basis points to 50 basis points on a Japanese 10-year.
Yeah.
And a whole lot more JGB buying is going to take place, Tom, going into a new year.
Yeah, what's so important here, and this is going to be, we're not going to make this an economic lecture today. It doesn't help anybody, but what does it mean for you kind of thing? What does yield curve control mean? But John, what it is, and you mentioned the size, but it's what we call sterilized. They are doing the action, as you say, of raising the band. We'll get into that. But at the same time, they're keeping the addiction going. They are buying bonds to the tune of 25% more. The purchase size will go up 25%. So borrowing from foreign exchange theory, it's basically a sterilized expansion of yield curve control.
So the broader question you've got to ask this morning, Tom, is whether you think this is the first step towards normalizing or a step towards the BOJ making their dovish stance a little bit more sustainable. Now, the BOJ is trying to communicate that it's about the latter and not the former. I think this market's trying to work out if it's the former and not the latter.
I don't think the market can work out anything. We're not going to do any charts right now, folks. I got to get the morning tang down before we do that. But John, it's real simple. This has global ramifications. Now the one that refused to tighten, refused to adapt post-pandemic, marginally, at the margin, joins the team. This is good news for Chairman Powell.
Hey, the pressure. Tom, I went through the year-to-date numbers. US 10-year, year-to-date, up 215 basis points. German 10-year, 245.
Nice.
Gilt 10-year, up 260. Before today, the Japanese 10-year, not up even a single basis point.
Well,
They've been sitting on it all year, Tom, and now we get a move.
I would say with great respect, and I defer to the PhDs out there, it's real simple. This is a fiction that they're doing. It is a process. There are lots of constraints along the way, including a burgeoning debt to GDP. Citigroup had a great note out, John. There are bonds. Imagine, folks, bonds in the United States where 80% of the tranche was owned by the government. That's where they are. You've been very good about this.
Tom, we've talked about days where that market's not even traded.
Yeah.
You go days, literally, where the benchmark's not even traded once. So there's no market there on some days at all. Are they trying to address that today?
I don't know. My basic thing here is it's hopium, as you would say, in that they're hoping inflation comes down. They have 3.7% inflation, which for us would be a home run right now. But in their zombie economy of nominal GDP, Paul Donovan, UBS, thank you for mentioning a per capita analysis as well. They've got a 20-year zombie economy. I'm talking about a zombie roll-up. Is Japan the biggest zombie roll-up of next year? They're going nowhere, so that 3.7% inflation hurts.
I think Governor Kuroda has seen the last couple of years, unlike the rest of the world, Governor Kuroda has seen the last couple of years as a once-in-a-generation opportunity to reset inflation expectations. As you say, they've been at it, Tom, for 20 years plus. The question we have now, TK, going into 23 is that it won't be Governor Kuroda, it'll be someone else.
In April,
In April, he steps down. So what comes next is the question we're all trying to answer.
It's a political debate, I suppose, but the idea here that they have deflation, disinflation, zombie 0% stuff. And again, we'll do the charts later. They look good on radio. But we come up here, and John, we're at like a 3.7% level. Nominal GDP minus whatever the inflation is gets you a real GDP that doesn't work out. That's their risk.
Dollar yen right now, 132. That is a 3.3% move in the yen's favor this morning. Yields up. Let's whip through the price action for you. More broadly, no real drama in the equity market stateside. Equity futures down not even 1/10%. As you get a lift of worldwide government bond yields, we get a move of about 8 basis points on a US 10-year, 366.21. I have to say, TK, I told you this was going to happen today. And certainly no one anticipated it happening this morning. But if I told you, would you have guessed futures were down just 1/10 and yields were up just 8 basis points?
I would have thought there would have been some reaction, although I think the Japanese yen reaction of 3% is very normal. I haven't looked at the dollar-yen chart yet or trade-weighted yen. I would note that the Bloomberg Financial Conditions Index is pretty much unched. This is the U.S. index, and I would have thought we would have seen some movement in the U.S. index off of the action in Tokyo.
Dollar yen, 132.40. Let's get to Win Thin on this, the global head of currency strategy at Brown Brothers Harriman. Win Thin, thank you, sir, for being with us. What do you make of these moves from the BOJ this morning?
Well, first of all, thanks for having me. I have to be honest, when I went to sleep last night, I was worried they wouldn't have anything to talk about. And lo and behold, we get a nice big surprise. I am one of those 50-some economists who expected nothing. This was a shock. The Bank of Japan tends to like surprises, even in this incredibly volatile environment. So once again, central banks are adding to global volatility. Not just the BOJ. We have every central bank around the world it's literally adding to market volatility with the policy actions and forward guidance. So it's a tough sort of road to travel for the investors. But bottom line, it's clear that the Bank of Japan is going to hike next year. We had second half of next year penciled in. We thought, again, like consensus, new governor comes in April, he does a review, second half, rate hike. But I think that's moved timetable much further ahead. I think we get something as soon as Q2, once a new guy is, maybe even Q1 if Kuroda wants to surprise again. So the global monetary tightening train rambles on, and that's bad for risk, and sort of markets have been so used to zero rates and abundant global liquidity.
So when you think this is a step towards normalization, it's not just about making a more dovish stance more sustainable.
Absolutely. Kuroda can deny it all he wants, but this is a clear step. And I would go back to my EM experience. Like once you start messing with the peg, the markets smell blood in the water. I suspect this 0.5 range will be tested very quickly and very aggressively. And I think the Bank of Japan has let the genie out of the bottle, perhaps a little bit too soon. As you noted, the big movement has been in the FX market. And I think that's where we'll continue. We'll see the real moves. But make no mistake, the markets will test this new sort of peg arrangement.
Dr. Thin, with great respect for your Burmese heritage, saving face, I believe, is Anna. I hope I'm pronouncing that correctly. It's Onryo up in Tokyo as well. And what I see here is a massive exercise culturally for the Bank of Japan as a domestic institution to save face. How does the culture of this forward to April and a new governor fit in? Explain the political calculus of the Bank of Japan as they stagger to April.
Sure, Tom. Look, we've had hints that there's going to be some sort of policy review sooner, perhaps rather than later. But really, I think the market's really poo-pooed this because, face it, Governor Kuroda has been devoutly dovish throughout this episode of higher inflation. So it is strange to me in terms of saving face to be saying one thing, with 100% certainty, and all of a sudden surprising markets. So, again, I think sort of reality sort of took precedence over sort of appearance. That is, they really couldn't keep this going much longer. We have a CPI print coming out on Friday. I expect to show further rise in both core and headline. And I think it became harder and harder to sustain this facade that they're going to keep things as is. So it's a tough. To me, it's very tough to predict now. Again, once this genie's out of the bottle, all bets are off.
For mere mortals, away from the dynamics of monetary policy and theory, what is his dominant constraint? Is it fiscal debt to GDP migrating to 300%? Is it the inflation rate you speak of? Is it yen dynamics? Is it China? What's the constraint you're focused on?
Tom, I'd say, to be honest, and this is not being facetious, it's all the above. They're juggling so many targets with very few instruments. And central banks around the world have gotten involved in way beyond sort of their remit, I believe. So I think the main thing, as you pointed out, was the debt to GDP ratio, right? They own half of all GDPs, as Jonathan pointed out, over 80% in certain tranches. Once the interest rates start going up, those borrowing costs are going up sharply, right? That's the one thing that's kept this whole ball of wax going, is that they've been issuing debt, buying debt, but at really low, sort of sub-market rates. If the 10-year yield goes from 0.1 up to even 1% or 2%, which is not out of the question, all of a sudden the debt burden jumps. Now, on the other side of this, and this is where my head starts to really hurt, and it gets harder and hard to explain. Well, half that is held by the government. It's not like it's held by foreigners and there's a run on Japan. So it's a strange construct that's developed over the last 2 decades.
Yeah.
And my feeling is that they tried to keep this going, sort of kick the can down the road. And I thought they were going to do more kicking than they have been. But it's a shock that they moved today.
Wynn, just briefly, that phrase, the genie is out of the bottle, it's not the first time I've heard it this morning. I think a lot of people share that sentiment. My question would be, if that's the case, why aren't we testing the upper limit of that band this morning? Why aren't we up at 50 basis points on a Japanese 10-year? Why do you think that is?
I would say it's too soon to say. I mean, this literally just happened hours ago. Give it some time. As you know, these big markets, it takes some participants time to sort of digest things. But I think when all the dust settles, it's pretty clear that you sell JGBs and you buy the yen. In terms of the risk, why they put this up. I thought they did not want to risk a strong yen. We have to talk about 125. Perhaps lower on dollar yen. Let's take one thing step at a time. But stronger yen at this point is a pretty sure thing.
Win, this was a pleasure. Thank you, sir.
Dr. Thin, thank
Win
you.
Thin of Brown Brothers Harriman. TK, you heard that? He's calling for a rate hike in early next year from the BOJ. What a turn of events.
Again, we're predicting here, but what I think is so important there with a gentleman from Burma is the cultural landscape here up the Pacific Rim. And John, it goes to China and COVID, and the horrific news we're getting on COVID across all of China. Was that an anti-science to just save face? In Japan, we've got a monetary theory. It is in no textbooks. I've heard not a single guest on Bloomberg Surveillance, hawk or dove, give it any credence whatsoever. It goes until the constraints wear out, and then you're done. To me, it's the debt buildup. What do they do at 90% debt when they own 90%?
I called it Operation Ostrich earlier this year.
I got a great
Just
chart.
head in the sand. Head in the sand as the rest of the world hikes, and the head is firmly out the sand
That's
now,
sort
isn't
of
it?
like the Red Sox free agent season there,
What's happening with that?
Oh, it's a barn buster.
Do you want to talk baseball?
Talk last place.
Do you want to talk about the real breaking news in the last 15 minutes? Commercial break before this show started. TK turns to me and the floor crew and says, I've never watched Gladiator. Have you never watched Gladiator?
It's a stilted life.
And Russell Crowe.
I love Russell. I love him in Master and Commander.
Come on. We've got to fix this, haven't we? This is absolutely ridiculous. TK.
They could do a matinee, Rocky and Gladiator back to back.
You should back to back?
Yeah, I could get a lot of...
Have you never watched Rocky either? Coming up next hour, Kelsey Barrow, she's watched them all.
Critic, she's watched them all.
From JP Morgan Asset Management on this historic move from the BOJ. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. It's now up to the Justice Department to decide whether to prosecute Donald Trump for his role in the January 6th assault on the Capitol. A House committee voted unanimously to refer the former president for prosecution on 4 criminal offenses, including insurrection. In a radio interview, he called the January 6th committee a kangaroo court. A surprise move by the Bank of Japan. Governor Haruhiko Kuroda shocked markets by doubling a cap on 10-year yields. That sent the yen higher against the dollar. Many economists see the move as laying the groundwork for exiting a decade of extraordinary stimulus policy. Sam Bankman-Fried's preparations to be extradited to the U.S. appear to be back on track. The FTX co-founder told a judge in the Bahamas he'll end his fight to avoid being sent to the U.S. to face criminal charges for the collapse of his crypto empire. But his local lawyer said he wasn't aware of the plan. The hearing was adjourned and Bankman-Fried returned to jail. Now it appears that he and his lawyer are on the same page. In the UK, more labor problems for the National Health Service. Nurses are on strike today after their first walkout last week. The Royal College of Nursing says it has a mandate from members to continue action for 6 months unless their wages are raised. Meanwhile, ambulance workers are set to strike Wednesday. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg. The top names at the Fed are on Bloomberg.
I do see growth slowing, but remember that's part of the mechanism of getting demand into better balance with supply and alleviating those price pressures.
We're clearly not in a recession right now based on the data. It is an economy that is growing only modestly, and I think it's an economy that's really seeing the imbalances between supply and demand diminishing and inflation coming down.
Nobody covers the Fed like Bloomberg, your global business authority.
Lionel Messi touching down in Argentina with the World Cup. TK capping a phenomenal career. The scenes in Argentina the last couple of days, Tom, just insane.
Just great. I mean, and thank you, John, so much for bringing visibility on this and knowledge, including Maria Tadeo's great work as well. What's the distinction here of a celebration, John, in Argentina versus Brazil?
Well, I can tell you this, Tom. Brazil deeply upset with what's taken place in Argentina, and I imagine they will be for the next 4 years. Can I also say this? If you're a Premier League manager and one of these players plays for you, look away now. They are due to play again on Monday, Tom. The Premier League season
they bounce back. You know,
commences.
You used to bounce back.
Can you imagine?
I think
you saying that these guys will bounce back from that week-long hangover they're about to get from celebrating. I think there was some articles recently, Tom, about a few phones being switched off, maybe a few players going missing for the next couple of days.
There's a brass plaque outside a bar in Plattsburgh, New York.
Is there? With your name on it?
My name is.
I bet that's not the only one.
As well, I had 2 goals that night, the next day or whatever.
Just fantastic scenes for that country. Absolutely fantastic.
Yeah, really something. And of course, we thank all of you for putting up with our coverage, mostly Emery Horton, who didn't get nearly enough airtime because Maria Tadeo was hogging it all here as we did World Cup coverage. Emery Horton joins us right now. Emery, you know we are gifted to have Tim O'Brien driving the horse at Bloomberg Opinion. He is truly, Timothy O'Brien, the #1 expert over many decades on former President Trump's finances. His op-ed piece in Bloomberg Opinion today is blistering about the need to move forward with a judicial process. What's the likelihood of that, Anne-Marie Horton?
Well, we just don't know yet, right? We have these referrals, these 4 counts of criminal referrals to the Department of Justice, and it's really up to them where they take it next. But I think one thing is clear. This is just another straw of issues that the United States, the former president of the U.S. is dealing with. Also, potentially, we could have a committee today release his tax returns over the course of a number of years, or at least release a key summary of those tax returns. So this just adds to the pressure of the former president. If you look at some of the polls that are being done already, what you're seeing in 2024, that he would lose to if they were to instead pick a new leader like Governor Ron DeSantis.
To the O'Brien expertise, does this go to Justice and to Attorney General Garland, or does this go to day one when the Republicans take over the House and nothing gets done? Which way does that cut?
Well, the Republicans will take over the House, and already they're talking about the fact that they want January 6th to focus more on the security implications, why there wasn't enough security on the Capitol, and really want to shy away from any of the politics. We heard from former Vice President Mike Pence, who talked about in his recent book how he thinks it's reckless what happened on January 6th, but does think that it would be more damaging for the Justice Department to actually go after the former president on this, because that's never been a former president that would be in this position in terms of criminal cases. But it really
goes to the Justice Department now, Tom. But what I'm trying to explain is that, yes, these criminal referrals yesterday hold no legal weight. They do hold a lot of political weight, and is just yet something else that is piling up that the former president is dealing with.
Does Mr. DeSantis of Florida support his former president?
I think he's been very mum, trying to make sure that he doesn't ostracize.
I got that right, yeah.
Yeah, he does not want to ostracize those individuals that, of course, he's going to want their support. These individuals who are very much pro-Trump. It doesn't matter what the January 6th committee says, doesn't matter what the Department of Justice says, doesn't matter what the former president's vice president says, they will still back him. So he is trying to really walk this tight line. And of course, he hasn't said he's going to come out and run. But obviously, all of this is good for him and his future.
Hey, Max, let's build on this. Can you walk us through how the former president's campaign is going for a second term as we go into a year where we'll be talking more and more about the Republican primaries?
It's not going that well, given the fact that on a personal level, right, you have his company was indicted for or found guilty of tax fraud. And then you have on the political side, if you want to be the leader of the party, you have to be able to merge the party together. You have to be able to show successes on the ground, right? And the current president was able to do that on these midterm elections. And the former president, who is running for another bid, was not able to do that. His candidates were not able to succeed. There was no red wave. What you have right now is Leader McCarthy struggling to get 5 very pro-Trump individuals in his party to sign up to make him Speaker of the House come January 3rd. So all of this has been incredibly difficult. On top of that, trying to run a campaign when you really are losing the support of your own party.
Tom, have you seen the polls last week? WSJ, Wall Street Journal, in a hypothetical contest between Mr. DeSantis and Mr. Trump, 52% to 38 to DeSantis.
Yeah,
and that is swinging further and further in Governor DeSantis' favor over the last month or so.
I think everyone of any persuasion is scarred from how wrong everyone got in 2016. I like those numbers you give me, but this guy has shown a resiliency that is truly historic in American politics.
So that's the lineup potentially confirmed for the Republican side of things, though, as AMH pointed out, we still need to hear from Governor DeSantis early next year. Anne-Marie, I believe we're also going to hear from the current president early next year on what he ultimately decides to do. Do you know if that's been confirmed or not? And that's just about an official announcement that we're waiting for in early January?
It hasn't been officially confirmed, but all signs are pointing that President Biden will early next year come out and say that he is going to run again. He has more support from his party now following the midterm elections. And of course, we heard what his chief of staff, Ron DeSantis, said, which is basically he's not going to preempt in the announcement, but what he does expect is that announcement to be that the president was going to run. Listen, the president said to us in a press conference, the reporter saying, I need to talk with my family. This is a family decision. He had that family time in Nantucket. He'll be seeing his family, of course, around the Christmas holidays. And then we all expect him to come out and make that announcement. And those polls as well, Jonathan, what you're bringing up, not just Trump versus DeSantis, but if there was a rematch of Trump versus Biden, Biden is also showing that he would win that race.
Interesting. Anne-Marie, just briefly, the news of this morning, it's not the BOJ, it's not any of this. Tom a few weeks ago told me he'd never watched Rocky. Then this morning, he's told me he'd never watched Russell Crowe's Gladiator. Then in the commercial break, I got a message from a Bloomberg subscriber, Danville Fox, who said, I've never seen Top Gun. And Tom turns to me and I go, no way. He's never seen Top Gun.
This is embarrassing. I don't know what are you doing on the weekends.
Okay, seriously.
Are you not entertained?
No, what's important here, folks, and I really, really mean this. I'm trying to link in here what John has taught me about the World Cup and all. So this weekend I got penciled in to see Evita, I think it is, with Madonna. Because Madonna had such an influence on Messi and all.
Oh, yeah, without a doubt.
So I'm going to watch Evita because it's Argentinian. Yeah.
Did that reference to Gladiator just go straight over your head? Are you not entertained? Does that mean nothing to you? It just means nothing to you.
No, usually you turn to me and say, Tom, I'm not entertained.
Have you not even seen it? Have you ever seen? You must have seen a trailer for the movie.
Oh, gosh.
No?
sort of.
You've got family in the movie business,
There's a
and you've
Coliseum.
never seen these movies.
Trust me, the family in the
I've never seen Star
the movie
Wars.
business. The family in the movie business, folks, reminds me daily that I have never seen some of these movies.
AMA's
I've
down
never
in
seen
DC.
Star Wars.
That's ridiculous too, Anne-Marie.
I know.
This list is getting longer and longer. You're about to tell me you've never seen Star Wars, aren't you?
No, I remember I was there like the second day it came out.
Okay,
it was
you were
really
there.
magical. The theater was packed, and the strangest thing at the end, like in the 40s, everybody stood up and clapped.
And they applauded.
Yeah, and I'd never seen that. It was
So you
really
have,
magical.
you do go to the cinema.
I used to. I don't go. I'm like a lot of people. Paul Sweeney talks about this.
Why did you stop?
It just, the TV at home is gorgeous, and I see resolution, particularly black and white resolution. Have you seen Mank?
No.
Academy Award last year, David Fincher. Outstanding black and white.
Not as many
resolution.
people have gone to see Avatar as the Walt Disney Company would
Yeah,
like.
yeah, it's a little behind.
That hit the
COVID
stock
may be
yesterday.
affecting that as well.
I mean, possibly.
So this is, what is this, the Hollywood Hour?
This is the holiday edition of Bloomberg Surveillance through the whole of this week until the new year. That's why Bramo's not here.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way.